Yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great day because the market is not having too well of a day. Don't let it affect your sentiment. The only reason you should really be upset about the market is going down is if you just never plan to buy stocks again. It's always a great thing to really get a quality company at a better price. So anyway, let me give you a quick portfolio update. Then I'll get into some of the stocks that I own that have been getting hurt hard today. So here's my main portfolio. This is my dividend only account. These are all like dividend growth stocks. If you notice, we actually bought 2 more shares of McDonald's. So they're now my largest holding. I think this is one of the safest stocks to buy in this environment. Like even if we go into recession or if we don't, McDonald's should do very well. I love their new extra value meals. I went to McDonald's this morning. The two people in front of me both ordered the new extra value $5 breakfast meal. So check this out. Yeah, my portfolio was down big in there, and our Roth IRA was down pretty bad today. But our Main Street Capital was green on the day, but every other stock was red. I actually also bought a new stock in here today. It's a pretty crazy company. This is Wix. Yo, what up, big man? It's good to see you. CoreWeave. Yeah, we'll look into CoreWeave. What up, Plasma? Yeah, I bought Wix today. I'll go into a little bit more about them later. They're one of the only. It's the only publicly traded vibe coding play out there, and I'll get into more about that a little later. But I think that's going to be a big growth company. They're normal. If anyone's heard of Wix.com before, it's like a website creating business, but I'll get into. I might make a video about Wix later. They're a cool vibe coding play. You have Wix? Hey, what up? That's pretty cool. So check this out. My Roth IRA is at we're up 11% all time. We started it nearly a year ago, so that's pretty cool. But yeah, that's my new stock in there. Every stock in here was red on the day, and then here, of course, is the market. Nvidia was green. Apple went really green at the end of the day there. I think Costco reports earnings. Maybe we'll go check out Costco real quick. But let me give you a portfolio update on these other stocks. Yeah, rough day. Check this out. We go to my main losers in my Webull portfolio. This is kind of like my risky growth on portfolio. If you look in the top left, we're only up 14% all time. That's our open P and low. Hey, Catherine, thanks for showing up to the YouTube stream. Good to see you. And check this out. Here are all our big losers today. We're down another 3.8% on Sprouts Farmers Market after I just bought some shares in them 2 days ago. That doesn't. That always happens. Anyone else relate to that? You buy a stock and then it just continues to go down. So anyway, those were our losers on the day. Robinhood was down 3.5, Reddit down. What is green on the day? Hey, Futu was green. Our defensive progressive was green, and AMD was slightly green. Egg stock green. Okay, cool. And then finally, we have our buy and hold portfolio. We were down 1.35% on the day. Check this out right here. Every stock was red in here on the day, just like our Robinhood portfolios. Yeah, every stock in here. Hey, hit the like button for me. I'd appreciate that. So yeah. Hey, actually, I want to check out this stock right here. Yo, we'll check out SCZL in a second here. UTZ. Oops. Let's go to Utz stock. I think this is like a food company. Yeah, Utz Brands. They own like the pretzels, if you've heard of them before. The stock, unfortunately, I just don't think is really going to outperform in the long run. They're the same price as they were back in 2020. But let me show you what, look at them on the past year. I think they have a nice dividend. What's the dividend? As the price goes down, the yield goes up. So they have a 2% dividend, but it says the payout ratio is over 100%. So it might not be sustainable. Let me see what the revenue is. So yeah, the revenue is only up 3% year over year. That just like maybe barely beats inflation. So revenue's up 3. And yeah, look at this. They're barely making any money. This really isn't great. Like 10 mil, 5 mil. Yeah, they made 10 million this quarter. Let's go see how much the dividend cost just for fun. Because why not? So actually, okay. The dividend cost 6.2 million a quarter. So actually, it's not the end of the world. They couldn't afford it the previous quarter though, and the quarter before that. Like, look, they were only making 2 mil, 900 or 700K. They lost money sometimes. So I just don't love that one. It doesn't scream quality in my opinion. But yeah, hey, I'm on a broker. This is where you buy stocks on if you want to get this brokerage I'm on. It's in the link tree in my bio, the first link there. So yeah, this is a popular fintech stock that I honestly think is a great company to own. Not financial advice, of course. I would recommend put this one on your watch list. This is a great growth company. If you're looking for a growth stock in the financial space, check this one out. I think it might impress you. Again, not financial advice, maybe just add it to your watches, maybe wait for it to fall more. They are still maybe a little bit expensive, but check out how growthy they are. Like, this is the kind of stock I love. And I would own this one, except I own literally their biggest competitor that does the exact same thing, and both stocks are doing incredible. Well, not incredible the past couple months here. I'll actually show you that the stock I was talking about was ticker symbol Dave. They pretty much do exactly what Sezzle does, and their stock charts look pretty identical. But check this out: the revenue for SEZL is up 76% after growing 60% after growing 20. Like the revenue's hitting a new record every quarter. But this is the best news: out of this 98 million of revenue, they are printing money. Their profits were up 116% year over year. The margins are insane. If we go to their net margins, it's a 20 to 35% net margin every quarter. So everything about Sezzle is headed in the right direction. They're deleveraging. Like notice their assets are growing, but their liabilities are staying the same. So the liabilities used to be 76% of the assets. Now it's only 62. Like that's major deleverage. I love to see that. Like everything's here is heading in the right direction. So this just looks like a great growth company in my opinion. If I own Dave, I would own them. So let's see here. Yes, Nick, if you want to get this app I'm on, again, this is a brokerage. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. So let's see. Is Robinhood good? I do have the Robinhood app, but it's not. It's a good brokerage, but I like this one more in terms of more usefulness. It costs less, so this one's free. With Robinhood, you gotta pay $5 a month for the yield and stuff. So anyway, oh yeah, Marvel I saw was doing great. Yo, Mansour said UiPath stock. So honestly, I'll be quick about this one because I have nothing nice to say about this company. They're actually my biggest loser in this portfolio. I love being fully transparent with y'all. Check this out. Look at our whole page of red right here. So yeah, we're down 42% on our UiPath position. I think it's too cheap to sell, but I don't think this is really a great stock you want to own. I wouldn't look into buying this one. It's just not a great one in my opinion. They're too cheap to sell. Like literally 25% of the market cap is just cash. They're doing like 100 million of buybacks a quarter. But they're just not as growthy as I like. They're not as quality. Like competition's really like they lost their moat pretty much. Like that was the original robotics AI play before AI was even a thing. But competition ate them. So I would be super careful. How do you feel about Toast going down? So yeah, I'm not shocked to see Toast go down either. We're down on our position now. This is a restaurant point of sale software stock, and if we just go to the restaurants right now, like we look at Wendy's, or really any restaurant, but Wendy's is just like a normal example. Like the restaurants aren't doing well right now, so I'm not shocked to see the restaurant service provider, like sales provider, for their software down too. So we really want to see the sentiment come back up for restaurants to really buy a lot more of them. Hey, what up, G7? He said BNZI stock. Let's see. BNZY. Oh, we can look at SoftBank too. Wait, BNZI. This is Banzani International. So yeah, we don't really cover these kind of stocks on the channel here. So if you look in the top right, the market cap, that's how much the entire company's worth. They're legit only worth $13.8 million. You know, the stock's at an all-time low. Like you just can't. I really, as you know, as I've been doing, we really look at the financials of the company. So let's see here. What is the balance sheet? So that's not great, but at least it's improved from a very worse condition. So yeah, they lost again. The whole company is worth 13 million. They lost 7.7 million this quarter. So the chance of bankruptcy is high here. So they must be diluting you to get this cash. If you go to whenever this loads right here, I bet it'll be super positive. Yeah, that's the only reason they're staying afloat because they're issuing shares or debt too. No, they're not issuing shares. That's all debt. Never mind. Because yeah, I wouldn't touch that one. Okay, let's look at SoftBank, SFTBY. So yeah, for anyone want me to look at a stock, make sure it's over at least like 200 million, 300 million a market cap. Like anything under that is just like why look at it. Oh, we could look at maybe SoundHound AI. That one's one I actually kind of like. So here's SoftBank. They're an ADR. I believe that's the Japanese bank. And yeah, they are Japanese. What's the market cap? Wow. SoftBank is a $190 billion company. And a lot of the gains have came from the last year. But check this out. If we go to their revenue right here. Oh, hold on. We're going to convert their currency because they're Japanese. We're going to convert it from Japanese yen to the USD just so we can get a better idea of how they're doing. So if we go to the revenue's up 19%. This looks a little weird. Well, they're making over $1 billion a quarter, like from the underlying business is making $1 billion a quarter, which is good. Looks like they're having some like maybe realized gains or something. So this one looks pretty. There's a lot of future growth. Like I know they're making investments into like a lot of companies. Like I think SoftBank owns some of Intel now. So they're kind of like an asset manager too. Yeah, check out their ARM business. That hits a new record every year. So I wish I could, yeah, like if their actual SoftBank business is lower than it was in 2020, I got to do more research on them, but they've had a huge rally. Um, did you buy every loser? Yeah, pretty much there, Mr. C. Did you see that too? Yeah, look at the whole page you read there. Luckily, we do have some winners. But yeah, I just like being fully transparent, by the way. I appreciate everyone being here. By the way, I sell nothing. I have no course, book, I don't I'm just on here to give my opinion. The only thing I do have is a YouTube channel if you want to support me. Yeah, watch out for people impersonating me. I'll never follow you or DM you. So here's Costco. They just reported earnings and they're down 0.28%. So pretty much no move on them. Are there any intelligent Moomoo comments here? Costco full year. Okay, actually, never mind. So anyway, Costco just reported earnings. Since they just reported earnings, we don't really have the numbers, so we won't look at them. Did you sell out of Perry? No, I didn't. Check this out right here. They're actually at the bottom here. Yeah, we're down 55%. Here's why you got to be careful buying stocks. Always do your own research. None of this is financial advice. Always do your own research. And I recommend, of course, if you want to buy a stock, a more disciplined way to do it is called dollar cost averaging, where you just slowly buy into the stock instead of just spending all your money at once. It's a more disciplined approach, especially in this environment as stocks at all-time highs. You don't just want to, if you really want a position, you don't probably want to dump all your money in at all-time highs right now. But even if you dollar cost average like I did here, it won't save you. Like I'm still down terribly on this stock. So just always do your own research. I'm not an expert. I'm just a college student. So let's keep going here. Thoughts on Verizon. Hey, Tommy, I'm going to give you the truth about this one. This is a pure dividend play. A sole dividend play. You're not buying this for any other reason than the dividend. And if we go to the yield right here, because it's actually sustainable, which is crazy enough. But look at this. You get a 6.3% dividend yield. Oh yeah, well look at SoundHound. What up, Luffy? They have a 6.25% dividend yield, but would you believe me if I told you Verizon stock is the exact same price that it was back in 1998? Here's the thing with some of these higher yielding dividend stocks. They just don't keep up with the S&P 500. Like literally the stock price of Verizon is the same as it was in 1998. Like, yeah, you get the yield, but it just doesn't really do well in the long run. So you're buying it to maximize your income, in my opinion. And it's a sustainable yield. Okay, let's look at SOUN. This one's a kind of growthy subscription play. They have like some AI audio subscription that apparently a bunch of people are signing up for. And it shows, proofs in the numbers. Numbers don't lie unless you're Enron or, okay, subscription service. Check out the growth here. Like if you're an investor in SoundHound AI, the main thing you want to watch is their subscription revenue, because this is how they're beating on expectations. Again, I'm a believer that the fundamentals, the financials growing explains why the stock either goes up or down so much, like beating on expectations or missing on revenue. So they actually had a huge beat on revenue. Analysts expected 32, they reported 42, but they did miss on their net income number. But check this out. It's from their subscription revenue beat. Just a year ago, this was a big nothing burger. It was 500,000 of revenue for them, but now it's 32 million. It's at a new record, up 780% after growing 780% from the previous year. So it's extremely growthy. They do have some royalties, but that business isn't doing great. Only up 8% year over year. That's their higher margin business. But anyway, I like them for the growth. As long as they can keep up this growth, I think this one's good. I would watch out for the net income losses because they are losing 40 to 50 million in net income a quarter. So watch that. But the subscription is what you watch there. Pretty cool. So hey, what up, Luffy? I don't know if I can find this one. Let's check it. Let's see if I can though. CCOEY. This is Capcom. They're an ADR. Oh, I've heard of isn't that like a festival, or I don't know. So let's check it out right here. They're an $11 billion company. They're Japanese. So let's go check out their financials. That's the big winner here. So we'll convert the revenue from Japanese to USD. So digital content. Oh yeah, amusement facilities. Let's see how that's doing. It's actually at a record, all-time high record of 20%. It's never been over 150 million. But let's check out their main business, their digital content revenue. Also, it's single digit past couple of years, but still, that's some very nice growth. At least single digit. Amusement equipment. Wow, look at that spike up in 20. This is fiscal years how they report, but they had a huge spike up in revenue. Anywho, let's check out net income though. Yeah, was that real in the most recent quarter? That was a real net income number. So they're making net income every quarter, and this is in USD, like 60 to 120 million now. It's a dividend, and you get a 1% yield, safe payout ratio. So they might trade a little expensive for what was the sales growth combined? Oh wow, 72. That's insane. Um, I guess that maybe sometimes what you'll see what happens is you see how they fell 40% year over year. Sometimes they report certain important holidays where they get a bunch of orders. They save it for the next quarter. So you sometimes have to like blend two quarters together. But anyway, overall, things look pretty good here. Pretty interesting. What up, Andy? He said mRNA. So this is another almost like pure dividend play because they're not growing too much anymore. But let's actually check them out for you. I got you. Hey, what up, Patrick? Yeah, well, we can look at Target too. Target's another kind of pure dividend play. Hey, what up, Gent? He said bros. Yeah, hey, maybe we'll look at Dutch Bros. But yeah, here's mRNA right here. Here's the thing. Like this stock is the same price that it was, before 2020. That obviously they peaked during the pandemic, but here's why this one, I wouldn't trust a lot of money in this one. Sorry, my Wi-Fi is a little buggy right now. So, hey, if y'all wanted to follow on, we stream every day, by the way. Oh, they don't even pay a dividend. So, actually, I'm thinking of a whole different company right here. Maybe the financials are better than I thought. I don't know. But yeah, most of the revenue came from the vaccines. If we go to the revenue right here, like, this doesn't look great. Like, these decline numbers, like, what was it in 2020? Let's see. Yeah, that's insane. We get back to this kind of environment, which I don't know if we ever will, but they could potentially go back to 6-7 billion a quarter. But look, it was literally just like, wasn't it 100 million? Yeah, the past two quarters, 100 million. And if we go to the net income, like this, honestly, that doesn't look great. And if we go to the net income, they're losing almost a billion a quarter, lost 800 mil, 900 mil, a billion. So I'd just be careful with that name. I can see why they're at an all-time low almost, like declining sales, negative net income. Just be careful. Maybe you could swing trade it though. Maybe it's oversold and technicals say it could retrace up, but fundamentally, financially, I don't think that's a good buy and hold forever stock. Yeah, hey, thanks there, William. Yeah, mRNA doesn't pay a dividend. I'm thinking of some other kind of healthcare stock like that. It's Moderna or I can't forget. I forget it. So yeah, Marvel's still undervalued. Oh, maybe we'll check out Marvel. Let me just look at Dutch Bros. Like I want to get through a lot of these stocks. I try and go quick. I only spend like a minute on each stock. Hey, Lan, yo, thanks for the rose there. I appreciate that, my friend. If you got a stock you're going to look at, let me know. Thanks, Lan. So here's Dutch Bros. Yeah, they've been struggling, kind of like all the restaurants. Like I showed earlier, Wendy's is doing terrible. Jack in the Box, Starbucks is even doing bad. Starbucks is flat on the 5-year. Let me see this. Yeah, look at Starbucks. They're the same prices they were back in 2019, unfortunately. Their margins, unfortunately, this isn't just Starbucks, but their margins are collapsing because of the high input costs. Maybe tariffs are affecting this, but like Starbucks used to make a consistent billion plus a net income a quarter. Well, now it's like, look at these declines. That's not great. 400 mil, 500 mil. And these weren't like one-time adjustments. Like that was real margin collapse. They're seeing a lot of competition from China. So and this dividend's getting more and more unsustainable with the decline. So I'll be careful with that. Dutch Bros is the better buy. That's what I was trying to lead back to. I forgot. Yeah, Dutch Bros I'd buy more than Starbucks for sure. They're kind of like a Starbucks adjacent place. So, Up Production said CLSK. So this is actually a Bitcoin mining company. I don't really see much value in the Bitcoin mining companies. I'd rather look at this. If we're 100% of the revenue comes from their Bitcoin mining. So you really just look at the balance sheet for these companies because all the assets they own is just their Bitcoin on hand. So they have $3 billion of assets. The market cap should be somewhat similar to that. Yeah, they're worth $3.85 billion. So a slight NAV premium right now. But I would really value it off their NAV value, and I would honestly rather just own Bitcoin. They just don't outperform Bitcoin. I've looked at Marathon, CleanSpark, Hive, all the Bitcoin mining companies never, what was it, Hut 8, they just don't outperform actual Bitcoin. Core Z, just buy Bitcoin in my opinion. Okay, a dividend stock. Hey, wait, yeah, Pfizer. So Pfizer, this one might have a safe dividend. There's some good and bad news about this one. It looks like things are starting to get more sustainable. Again, you're mainly buying Pfizer as a dividend play. If you look at them they obviously, pandemic was huge, but Pfizer is the same price as they were back in 1998. They own a lot of random products, like obviously the vaccines, like Viagra, stuff like that. But here's how we can tell if the dividend is safe, because if we go to the yield, yeah, you get a 7.2% dividend yield. But before I show you the net income, let's go see how much that dividend costs every quarter. So they have a 7% dividend, and their dividend they're paying out every quarter costs $2.45 billion. So the dividend costs $2.45 billion every quarter. Let's go see how much they're making every quarter. So good news. The past 2 quarters, they were able to afford it. They actually made 400 million extra. So they were able to retain some extra net income, which is good. What are the sales doing? So sales are actually up double digits. That's good news. So you want to make sure they're making over, what was the EPS this quarter? So 3 billion is 50 cents of EPS. We always want to see them make over 50 cents of EPS, and let's see what the EPS estimates are. Pretty much over 50 cents. So Pfizer looks pretty safe. And analysts are expecting the dividend to be at a safe around 70 to 80% payout ratio. Hey, try not to spam there. Yeah, hey, we'll get to Sunrun. Please don't spam, dude. Let's see. Hey, what up, Nemo? Do you believe quantum stocks will be worth something in the future? For sure. For sure in the future, but not a single one. I've looked at all of them. RGTI, Qubits, IONQ, like literally all of them. None of them are worth even touching, like fundamentally, like financial wise. Like IONQ, maybe after their new $1 billion acquisition of something, but they're still, all of them are extremely expensive, like even more expensive than Tesla type expensive, even more expensive than Palantir. But this is all momentum right now. Like with the stock market at all-time highs, this is kind of the environment to kind of be in the momentum stocks where they'll just continue to momentum. Even when people think that it's over and they can't keep on rallying, they continue to do it. But this is one that I just don't see the risk to reward. And let's look at QBTS. That's a $9 billion market cap. I think I know how to analyze a company. I've seen many companies worth $9 billion. And I've never seen a company worth $9 billion do a couple million of revenue a quarter, $3 million of revenue, lose $100 million. Like, I'm just be super careful. Are the analysts expecting growth? Like, the analysts aren't really expecting growth, like 3 million. I think we're in if I wanted quantum exposure, and I do have quantum exposure, it's via Google and some other names. Like Google's going to be the industry leader. They have the money and the talent to remain the industry leader. They're already the leader in quantum, but they're obviously not a pure play. Hey, Tofu, what up, man? Thanks for the roses there, the 7 roses. I appreciate that. Hey, what up, Jeff Mack? Stock market's brutal this week. I think things might turn around tomorrow. Yeah, that'd be great. What I've noticed, look at our portfolio today. Check this out. Our main dividend Robinhood portfolio is down bad. We're down 1.4%. Every stock was red on the day, so that's great news. And also in this portfolio, every stock was red on the day. So not a great day for me. And look at this portfolio as well. A lot of red stocks. What was down the most? Sprouts Farmers, UiPath. So yeah, you got to be careful out there. But this is good news because we finally get better valuations on high quality companies. BURU, please. Yeah, thanks again for all the roses there. Let's do it. Thanks, Tofu. Okay, this one, okay. I'd be super, super careful with this one. If you got another stock you're going to look at, let me know. But we're not really going to cover this one. If you look in the top right, they're only worth $18 million. Because this is worth 13 cents a share. They're worth 18 mil. What's the net income? And look at the sales. This is like a textbook. Like, please don't buy this. Like, if you buy this stock, just are you aware of this? Like, did you know the sales declined 97% to only 9,000 of revenue? Revenue was 9,000. They lost 12 million in net income. Remember, the market cap was worth 18 million. And look at this balance sheet. Oh my goodness. They have 47 million of debt and no assets. So everything here is like headed in the wrong direction. I wouldn't even consider that. Not even trading it or something. Hey, good luck, man. So let's see. Hey, what up, Wealth? He said, what up, Spread? Yeah, quantum's overpriced. Pricing in major breakthrough. Yeah. As long as AI continues to do good, maybe quantum will. Boy, Professor Pumpkin, good to see you, my friend. He said PEP. Oh, yeah, then we got to get to Sunrun and some of these other names. I'm trying to get to all these here. So here's Pepsi. This one's, they just took a big stake into Celsius stock, CELH. And for that, like 5% stake in Celsius, they sold them Rockstar Energy. What's the app called? Yeah, hey, T-Dog, this is actually a brokerage. It's where you buy stocks on. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Affiliate link, full disclosure, it's free. But check this out. Look at the dividend. This is a nice dividend play. They have a 4% dividend. So that's great news. But I think why the stock is flat, like Pepsi's the same price that it was back in 2019, 6 years ago isn't great. That's kind of because they're not growing too well. They don't have much pricing power. Like you can't raise the price of a can of Coke to $3 or a can of Pepsi or whatever. They own names. But yeah, the revenue is only up 1%. So we've seen some slow growth. Revenue is only up 1% year over year. Doesn't really beat inflation. And the profits actually fell 9. So they're losing their margins a bit too. But they're doing like new acquisitions. Like I love their brands. I love their brands. Has anyone heard of Popcorners? I love those. Doritos are good. Flamin' Hot Cheetos. Yeah, Pepsi's cool. Um, Already at 20. Hey, that's awesome, Tofu. Yo, your future self will thank you for getting into stocks. Remember, the goal isn't really to get rich quick. It's really just to preserve, in my opinion, it's really just to preserve and build wealth. Like, here's kind of, you're supposed to get 8% a year. That's what you should aim for. Like, you turn $100 into $108 a year. It's not get rich quick, but it's the compound effect. You turn $100 into 108. Then the 108 the next year turns into 120. Then 120 to 180. Or the snowball kind of happens. Compound interest plus with your, same for Coca-Cola. I think actually Coca-Cola is a better buy than Pepsi. Actually, you know who? Actually, I own Coca-Cola Consolidated. I own the bottling company. So actually, first off, I would pick the bottling company of Coca-Cola before Coca-Cola just for more growth. But let me actually show you who owns Coca-Cola. You know who would approve my message here is Mr. Buffett himself. Let's over to the Buffett portfolio real quick because I just want to share with you 9%. He loves the dividend stocks, American Express, Bank of America, Chevron, Oxy, but 8.66% of his portfolio is in Coca-Cola. And they're also on a pretty not great downtrend right now, like all the food stocks are. But these are great dividend growth plays. This will not outperform the S&P 500 in the long run. Like the tech heavy S&P, like Coca-Cola will not keep up with the S&P 500 and QQQ in the long run, but it's kind of like a safe and reliable stock. You get a 3% dividend. That's really good. Yields are going down right now. Money market fund rates are going down. They just went down 25 to 50 bips. Like we used to get a 4.15% APY. Now we only get a 3.85% APY. That's because your savings yield APY, your money market APY follows whatever the Fed cuts do. So the Federal Reserve. So let's look at some more stocks here. So, what up, Steve? He said, let me see if I can find this one. It's kind of a weird ticker symbol. AGAGF. Maybe we can find that one. If not, we can look at some. Target has a 5. Yeah, I can't find that one, unfortunately. Maybe it's not on this exchange. I can only view like American, Canadian, like Japanese, Chinese companies. What was that stock I wanted to look at? There was a great one. Do you have an opinion on leverage options? No, hey, don't touch leverage. I've never been in leverage before. Let's look at SMCI then. I don't know why I'm covering this, but because I don't think it's a buy. They are one of my better performers. Like it's like in the NVIDIA ecosystem. They're NVIDIA gives it Supermicro computers so many shout outs because they install the Blackwell so good. But check this out. I don't think it's a buy right here. I am up 75% on my shares. So but that's not why I wouldn't buy it. The reason I wouldn't buy it is because I'm concerned about their margins right now. They did just get a huge new contract with DataVault worth like a good chunk of their market cap. But check this out. This is good news. The sales are up. So the revenue's up 7.5% year over year. But here's the bad news. So revenue's up 7.5, but the net income is down by 35. So what does that mean? Like they still made net income, but why was it down compared to the revenue? Well, that actually means their margins are compressing. Their margins are falling. And once this margin loads here, you're going to be like, what just happened? The margin fell 38% after falling 37%. They just sell a commodity at this point. Dell now got into them a little bit, but I'm just concerned with their margins. But I do own them. What is this? Yeah, hey, Rosa, if you want to get this app I'm on again, this is a brokerage. You buy stocks on. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. It's like a brokerage, and it's you can learn, and it's not like your typical brokerage because you can actually learn about stocks and stuff like that. They actually give you real research tools, and you can view all the super investors' portfolios, like Nancy Pelosi. Some of these super investors that are worth over $100 million, they have to make all their trades public by SEC law, and you can see their exact portfolio, and you can kind of copy them. They have you can set your weightings and everything, but yeah, you can see their exact portfolio with their exact weightings. She has Apple as her largest holding, Amazon, Google. Like notice a lot of the super investors have Apple as their largest holding. Apple is the largest holding in Buffett's portfolio too. Anyway, someone's been saying RXRX, that one's actually in the NVIDIA portfolio. So that's kind of cool. NVIDIA owns this stock right here. But again, just because NVIDIA owns a stock doesn't mean you should. And to be honest with you, this is one of the stocks I think you should not own. And it's not it's just from a financials point of view, and it looks like there's some technical analysis on here. This app is saying there's a bullish continuation wedge. I guess on a technical point of view, it says the rise probability is a 95% chance. That's the technical analysis, but let me show you the financials of the company, because this is the one thing that concerns me. What's the market cap to? So a $2 billion company, very small company, worth $2 billion. Here's the bad news. The revenue is 19 million, so really not much. 19 million in revenue, but this is the worst part. The fact that they're burning 100 to 200 million in net income a quarter. Remember, if they lose 200 million, that's exactly 10% of the entire company, 10% of the entire market cap. So that's not great. That's unsustainable. They really need to fix this the growth isn't there to really justify these huge net income losses, I think. So I would just be careful with this one. Luckily, they have a decent balance sheet, probably from issuing shares. Let's see if that's true. Hey, try not to spam there. Yeah, we'll get to Palantir. Don't worry. I want to see this cash from finance. Hey, try not to spam there. I appreciate you. Try again. Okay, and look at that, ARK Investments. Yeah, ARKK also owns some shares. So I guess NVIDIA owns shares, SoftBank owns shares. Okay, I guess we're just not going to be able to view the cash from financing activities. Okay, well, yeah, so they are diluting you. 300 mil, 100 mil. That's 5% of the entire. They diluted you by 5% just this quarter. Watch out for them. Just from a financial point of view, what's your biggest holding? Yo, what up, Rambo? Good to see you. Yeah, it's actually Comfort Systems right here. By far my largest holding. I got $9,300 in there, and it grew to my largest holding. If I wasn't up 113%, if I was up 0%, it wouldn't be my largest holding. So let's see. Let's look at Palantir right here. All right, no problem, man. We'll look at Palantir. Yeah, we could oh, yeah, what up, Ben? Yeah, remind me to look at ASML and Micron. Remind me to get to these. I'm so sorry. The chat kind of got spammed there. IoT, hey, remind me to look at IoT. I will forget. Okay, so here's Palantir. This stock is at all. I want to get to every stock on the YouTube stream of it. But here's Palantir. Yeah, never be afraid to comment the stock. I'll always try to get to it. So Palantir's at an all-time high. I think the valuation's pretty nutty on this one, to be honest with you. I wouldn't touch it here, but I'd love to own this company. This is the kind of company I want to own financially. Great financials, just too high of a valuation. They might deserve a high premium, though. They traded 123 times revenue. Not 123 times profits, but 123 times revenue. That's crazy. But this is why a lot of people like them. Half the revenue, or 55% of the revenue, just comes from the government. A lot of police stations are using Palantir software, and that business is up 49% after going 23, after going 15. The growth is continuing. Just hits a new record every quarter. And not just the government revenue, but also their commercial side with other S&P 500 companies and with your typical mom and pop shop ice cream shop. This is growing like crazy. It's up 46% as well. These are incredible growth rates. They just had their first ever $1 billion revenue quarter, 330 million net income, so 33% net margins, completely debt-free company. I mean, absolute monster of a balance sheet on Palantir. Literally no debt at all and $6 billion of cash. And their cash earns interest as well. So they're in a great spot financially. Yeah, here's their cash in the top right there. $6 billion of cash, up from $4 billion the same time last year. So Palantir's a beast, too expensive for me to buy in them. So here's a stock I wouldn't touch, to be honest with you. Google, that's a good one. We got to get to Google. So here's Sunrun. If I was looking for a solar stock, check out FSLR. That's my favorite solar stock. But let me analyze this one financially. Looks like they have had a little recovery the past couple weeks here. But let's see. What is their money doing? So the revenue's up 8%. But yeah, this is the thing. If you invest in this company, just be aware of this one fact right here. Kind of think about this logically. Their market cap is $3.9 billion. So the whole entire company is worth $3.9 billion. You're buying in at that valuation. You could buy the whole company for $3.9 billion. So let's say you buy the whole thing for $3.9 billion. You're buying a business that lost you $278 million in net income this quarter. $277 million lost the previous quarter. $3.4 billion the quarter before that. They just burn money for history. Look at this. Even in 2023, they lost billions. So you got to be so careful with these money burning companies. I literally strict for a lot of my stocks, unless it's a very rare exception. I almost screen for net income positive companies. I don't want any of the net income losing. I just gotta be careful what brokerages. Yeah. Hey, Jason, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Moomoo is my favorite one. So let's look at Google right here. It's an affiliate link, full disclosure, so it helped me out. Yeah, if you want to get this brokerage I'm on, Linktree in bio, first link, full disclosure, it's an affiliate link. So if you actually sign up and deposit $100 and buy stocks, we'll both actually get a little $20 fractional piece of Nvidia. So it helped out the channel, but you totally don't have to. You can just type it into Google. But anyway, here's Google right here. This is a stock I do own. It's in my buy and never sell portfolio. I'm never gonna sell Google. Check this out. Honestly, if you have the intention to just buy and literally never sell them, it's almost worth buying. I think it's worth buying right now. Not full size, don't bet the farm yet, but it's worth a little bit amount of money. It's like I think it should be in everyone's portfolio, at least as a small percent. So check out the PE. This is the net income multiple. The PE ratio is just the net income multiple plus any buybacks or dilution, and they're trading at 26 times net income. I really feel like they could stretch up a little higher before. That's not ridiculously expensive, and they're like an ETF in one. Their cloud business is growing like crazy. Meta signed a huge deal. Like their cloud revenue hits a record every quarter. They own YouTube, Android, the Google Play Store. They own Waymo. They're in quantum chips. Like they're literally an ETF in one. So that's pretty cool. Also, if we go to their profits down here, like this is the ridiculous part. So I love their assets. First off, like if you're on YouTube, why not own some of YouTube stock or something? But look at this net income. This is the best part. They literally make they're making, if you average it out here, like pretty much 30 billion of after-tax net income a quarter. Like it's insane. A lot of like back here, they were pricing in like, oh, ChatGPT is going to replace Google, but then Google just implemented like AI thesis like into the Google search, and now they're an AI beneficiary, and now Gemini is the leading model, and you get a 0.3% dividend. Here's the crazy thing about Google, if y'all want to see something nuts. So they're making 26 billion nearly of net income a quarter. What is Google doing with 26 bill of their after-tax net income a quarter? Well, since they're so big and regulators won't really allow them to buy a company, they just deploy it all to share buybacks. Literally for history, they just buy back 14 to 15 billion dollars worth of their stock every quarter, always. It's like that provides so much value to you. That's when there's less shares that exist. There's like 3% less shares that exist from the previous year. Steven said, do you still hold Reddit? If you listened to me a few months ago, you'll be up. Yeah, I do still own Reddit. I'm up crazy on them. Yes, sir. Yo, what up, Skull? He said, what do you think of NVNI stock? Join the YouTube live from TikTok. Yo, Calvin, thanks so much, dude. Yeah, we'll look at USBC for sure. So let's look at this one right here. Oh, so to be honest with you, we're not really going to cover this stock. They're only worth $100 million. The stock's at an all-time low. The stock's $1 a share. They lost, so again, they're a $100 million company. They lost $100 million of net income this year, and they have more liabilities than they do assets. Let's hope they're growing. This is a Brazilian company, so we're going to convert their currency into USD. And it looks like from the full year 2023 versus 2024, the revenue's down 10. Lost net income. I would just be careful with this name just because of this, only worth 100 million. And they're Brazilian, so you'll pay an ADR for that. Hey, what up, Jake? We aren't bag holders. We are. Hey, what up? Let's see. InnoData and APLD flying this week. Yeah, InnoData has been crazy. Let's actually pull them up, and then we'll look at USBC. Actually, InnoData, I have no explanation. Just like maybe institutions are buying or something, but check out this rally the past week. Yeah, we can look at Amazon too. I'm actually considering buying a share of Amazon right now. Remind me to get to Amazon, Mike. Yes, sir. They're one of my holdings too. So InnoData, Amazon's a customer of InnoData. Actually, Amazon is one of their top 5 customers at InnoData. So is Meta, Microsoft, but this is a data labeling company. If we go to their digital data solutions, this business is booming. It's up 99% after going 92. Like this is just a growth company. Like the analysts are expecting, like this was a revenue quarter, record 58 million in revenue. It's expected to be 70 million in 2 quarters. Like these year-over-year growth rates are nuts. It's up 79%. The revenue's up 79% after going 65, and this is the best part. They're a profitable company. They're making net income every single quarter. If you go to the FCF, which stands for free cash flow, they're free cash flow positive every quarter for the past year. Same with net income. They have a really good balance sheet, deleveraging. Liabilities went from 57% of the assets to only 34. Like at this growth rate, like this is insane. I can't wait to see where they're going to be in a couple quarters from now. They are a bit expensive here, but yeah, they're insane. So let's look at Amazon. Oh, wait, actually, let me look at USBC, then we'll get to Amazon. So USBC, okay, 500 mil company, extremely small market cap. So yeah, look at this. This is if we go to this is a revenue-less company. So right now, so yeah, if we go to the revenue right here, this is from 2022. But for right now, they don't sell anything. They don't sell a product or service. Literally a revenue-less company. I'm guessing these huge spike ups right here are on the news of them finally maybe being able to sell a product. But then whenever they release that news, they still haven't sold anything, so it sells down. So you want to really be so careful. It's a revenue-less stock. Maybe when they have some revenue to bump, but just so much risk on that, like a coin flip. So, okay, let's get to Amazon right here. So yeah, I actually own them in this portfolio right here. If you look at the top of my account, it's called the buy and never sell portfolio, because once I buy a stock in here, I really try not to ever sell it. And Amazon is one that I deemed buy, never sell. Like, they're the company you don't want as competition. They're an e-commerce play, a book play, AI, satellite, cloud play, grocery store play. Like, they're just an innovative company. Like, if you go to their cash flow investing activities, this is what you want to see for a company. If this is negative, that means they're buying assets, investing in the future, and they spent $39 billion on capex this quarter. That's great news. Like, if this number was positive, that means they're selling their assets. So you never want it to be positive. And here's how Jeff Bezos is so rich. He owns 8.3% of a $2.33 trillion company. That's insane. So anyway, check out the margin, or the margin expansion here is what I love. If we go to the revenue's up 13, but net income is up 35. That's great news. That means they're expanding margins, which is super important for them. They have better margins, now than Walmart, Costco. Actually, I'll have to verify that. But better for 3x the net margin of a Kroger, but they're a cloud play. But yeah, look at their old margins in 2022. It was a tough buy. Negative margins, single digit net margins, but now it's double digit, which is pretty cool. Anyway, Amazon's a beast. Love them. I like them. If you have again, they're kind of like Google. They're a Mag 7 stock. If you have the intention to just buy and never sell, it's worth buying here. It's worth buying right now. And I was buying some shares not that long ago. If it falls more, I'm buying more, like, not financial advice. SESAI. Hey, what's the ticker symbol for that? CEG. Yeah. Hey, what up, Trap? So CEG, I actually own them here. Here's my Google position as well. Looks like Google, maybe there was some sort of news that just dropped, but Google just rallied up. I don't know. Maybe it's just momentum right here, but one of the stocks I own in here is also Constellation Energy. This is your main nuclear play. If AI, like, if you go to anywhere right now, like, they don't have the electricity for new data centers and stuff. So this is your main AI data center, clean energy play. They own the most amount of nuclear reactors out of any other publicly traded stock by far. Second place is like VST, and they're like 25% of the reactors. So largest, purest play for nuclear energy. They're a beast of a financial company. You get a small dividend. They do share buybacks, synergistic M&A. They just acquired Calpine, which is $2 yearly accretive to EPS and $2 billion yearly free cash flow. It's insane on CEG. So Ivan said LAC. I think this is Lithium Americas. And to be honest with you, wow, look at that right there. They have had an insane rally. I wonder if we can find the news on there. U.S. Energy Department negotiates 5 to 10% stake in Lithium Americas. Check that out. That kind of reminds me of what just happened at MP Materials. So, yeah, that's really interesting. I know for like MP Materials, they're finally going to recognize revenue in like 2 years. But yeah, that's interesting. Thanks for sharing that. Have you heard about the Tesla Starlink phone? Haven't heard of that. $750 a month. Wait. $750, no monthly payments for data, internet, 6 cameras. That's interesting. When did that come out? Wait, is that under Tesla stock or? Oh, wait, probably not. Oh, that's interesting. Yeah, hey, Cran. Oh, wait, hold on. Yeah, let me get this. If you go to the description, or I'll put it in the chat here, all the apps if you want to get this, these are brokerages I'm on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So, yeah. Let's see. TMC won't disappoint. That one also is a revenue-less startup. TMC has no revenue, so it's a lot of momentum and hopium right now on them. Or here's what I mean. You got to just be careful with some of these names. Like, if you go to the revenue is zero. They've never sold anything, not a product or service, and analysts aren't expecting revenue for a while. So you got to be careful with some of these names. So I just don't touch the revenue-less startups. Garrick said MO. So this is a higher yielding play. So these don't really outperform in the long run. Like, this is the same price that it was back in 2016. So 9 years ago. But here's what you do get, and it's very sustainable. You get a 6.3% dividend yield with this company. And that's the main reason you'd buy this, for the dividend. And if you're lucky, you get a little bit of stock price appreciation over the long run. So pretty cool as a dividend play. They're one of the safer, higher yielding plays. Can you tell me why the market dropped today? I lost hundreds and can't pay rent now. Well, hey, I'm sorry to hear that, man. I definitely wouldn't invest in stocks your rent money. Um, that sounds like you were trying to trade your money. Again, I really think stocks are a tool to preserve and build wealth over the long run. You just y- and you buy the dips, and great quality stocks over time. So let's see here. What is a pure energy play stock? CEG, Constellation Energy. Or if you're just looking for, well, that's a utility, but it's an unregulated utility. Um, but it's energy. It's nuclear energy, and that's the hype right now. That's the hotness. But also, you can get into VPU. This is just the Vanguard Utility ETF. It's so consistent. These regulated utilities, literally, government gives them the revenue. They get guaranteed 6 to 7% returns a year. Well, it actually depends on how often they regulate, update it. But you just buy. This is just so safe, so consistent. Its largest holding is NextEra Energy, then Constellation Energy, third largest holding, Southern Company. These are other great ones. So someone said, okay, let's look at SES right here. Let's do it. SES. Um, what was the nuclear stock you were talking about? Yeah, that was CEG, Constellation Energy. It's the largest pure play for nuclear energy. There's not even close. There's not even a close second. Close second is VST, Vistra Energy, but they own like 24%. This is the largest, most purest play for nuclear energy and nuclear reactors. And they had best financials. They're unregulated, unlike Southern Company, NextEra Energy. I really think that's going to be the winner utility. But someone said SCS stock. You got to be super careful with this name. Like, they're worth 600. Like, let's just look at their financials. Again, they're momentuming right now because everything's been momentuming. But let's see. Revenue is $3 million. They lose 10 to 30 mil a quarter. Whenever you lose net income like this, that money has to come from somewhere. So that's why the assets are kind of trickling down every quarter. So we kind of want to see them fix the trend. And maybe as they're going from completely revenueless to finally some revenue, 3-5 mil. Looks like they actually slightly missed on revenue expectations, but the revenue is expected to stay at around this 20 mil a year. So maybe it'll go to 30, 40. So maybe 50 mil of revenue a year, $650 million company. But those net income numbers scare me. To really trust, like, to just buy and hold them. I'd be careful with that one. So let's look at SoFi. I love them. I do own them. They're one of my second best performing stock in terms of percentage wise. I regret every share I've ever sold of this company. So, oh yeah, we could look at Apple Oven too, remind me. But here's SoFi Technologies, great fintech right here. They're so growthy. This is the part that justifies their high valuation, in my opinion. If you go to their financial services business, which is now 42% of the revenue, it is a growth beast. It's up 105% after going 80, after going 250, after going 440. It literally hits a new record every year, every quarter, and not just like by 1-2% year over year growth, but by 100% year over year. Like, the growth is insane there. So I really think people are just starting to take SoFi serious. The revenue was 850 million. Out of the 850 million of revenue, 100 million of it was net income. They're now making net income every quarter. They're growthy. I really like SoFi. They're expensive here for sure, but they deserve a high PE. And I'm not selling any shares. I'm not buying more here. I want to see it go a bit lower to really consider it. Hey, what up, Milo? He said, what do you think of Rocket Lab? Let's check it out. RKOB. So this is actually my favorite space stock. How much shares do SoFi? Yeah, actually, I have like 25 shares. Check this out. This is one of our best performance stocks. I regret every share I've ever sold in them. I used to have a lot, like double my size, but we have 24 shares. We bought them years ago. Anyway, let's look at Rocket Lab right here. Space stock. They're one of actually my favorite space stock out there. Stay away from ASTS, stay away from Lunar and some of these other names. I like this one because the financials are good. Like, they have real revenues. This business, their space systems revenue is at 97 million, a record, almost at their first $100 million quarter. So that's up 27% after going 94. Like, the growth is insane on that business. And the growth is really good also on their launch services business. This business, is up 59% year over year to 46 million, a new record. It's never been over 46 million. Like, so both businesses are growing. They're beating on expectations. Like the orange lines, what the analysts expect, they're beating on expectations, and it's continuing to grow, and they'll beat on that. So that's really interesting. One thing I would watch is their net income losses, but for now, it's okay for them to lose net income as long as they can keep up the high growth. And they just also acquired Geost, which will add even more growth to the business. Pretty cool. I don't know if I touch them right now. They're pretty expensive. What was the nuclear stock we were talking about again? Yeah, that was it. CEG, Constellation Energy Corp. I've actually made, if you want to learn more about this stock, I might make a new one about it just because I love them. Their investor presentation is so fascinating. Largest and purest nuclear energy play out there. Best like insanely good financials. Like, anyway. And they just acquired, it'll close at the end of this year. They're buying a company right now called Calpine. And as soon as they buy them, it's instantly accretive $2 a yearly EPS. So literally, like, that means synergistic. Like, that's insane. That's 50 cents of EPS a quarter. They can now raise their dividend by a bunch that's just in $2 billion a yearly free cash flow in synergies from that acquisition. Like, that's why the stock has rallied up so much, because of that future revenue. So if you're wondering why does CEG look pretty expensive right here, that's because of the future growth expectations from the Calpine acquisition, which is like, okay, I'll get off that. So all said, or actually Leet said WOK. Let's get to WOK, and then we'll get to Grab. So, what up, Jonathan? Of joint stock companies. What is that right there? So here's Westlake. Unfortunately, it looks like this. Hey, trying to hold on here. Hey, we don't tolerate spam here. Yeah, that's not cool. But here's WOK. Here's Westlake. Yeah, unfortunately, the stock isn't doing too well. It's the same price that it was back in 2014. So you bought the stock in 2014, you're actually down on your position, but looks like they have a 2.8% dividend yield. They've been raising their dividend very fast. Let's see if the business is also growing that fast. So they sell performance and essential materials, housing and infrastructure. Oh, so the residential exposed. So that, yeah, if we look at the orange line, looks like they're missing on their analyst expectations. And this is updated. Looks like it's expected to decline a bit more. What about net income? Yeah, look at this. They've been missing like crazy. Wait. Wow. So look, this is not great. They can't afford the dividend this quarter. They lost 130 mil. They lost 35 mil, only made 19 mil. They can't afford the dividend. Let's see how much the dividend costs just for fun. The dividend cost exactly 69 million a quarter. So that's rough. I can see why they're not doing too well, because those net income losses. So let's look at Grab right here. This is actually an Uber competitor. So if you're wondering, what does this stock do? What is Grab? Well, they literally do exactly what Uber does. There we go. Sorry, my Wi-Fi is just terrible. So, hey, hit the like button if you want. We stream every day. I sell nothing, no course book. But here's Grab. This literally, like I said, does exactly what Uber does, but they're in all these other countries. It's an international Uber. Notice the US and Canada aren't on here. It's like Malaysia, Indonesia, Singapore, Philippines. These are all their largest countries. And they grew so much attention that Uber decided to buy them. Uber is the largest shareholder. It's kind of backed by them. They own 13% of all the shares. Toyota Motor owns 5.5% of all the shares. They're net income positive every quarter. They're really growthy, no net debt. Revenue's up 24 after going 17. So I actually really like Grab. Look at those expectations as well. They're supposed to eventually be over $1 billion in revenue a quarter. So I like Grab. What platform are you using? Yeah, hey, I'm actually on a brokerage right here. It's where you buy stocks on. If you want to get this app, I'm on. It's in the link tree in my bio, the very first link there. So yeah, it's my favorite one. Let's see. IoT. Oh, my bad, Jeff Mack. I forgot to get that one. Hey, shout out to Jeff, the YouTube member. So shout out to Jeff Mack for being a member. So here's IoT. This is a $22 billion company. The stock's been flat for a while. Let me see. The stock's been flat since, actually just for a year. Let's see what the financials are doing. So revenue's up 30% year over year. That's really good. Revenue's up 30 after going 36, after going 42. That's actually insane growth. Wow. I'm actually really impressed. Let's look at that on an annual basis. This is the trend you really want to see. This is in fiscal year, so that's why it says 2025, but it's still 4 quarters. That's the trend you want to see for the revenue. Let's check out the net income, though. So they are still losing net income, but notice how close they are to profitability. And notice the trend, like they lost 66% less net income than the same time last year. And they have a really good balance sheet. So probably, let's go look at the net income expectations. They're probably going to be net income positive. Oh, so yeah, they're beating on expectations. They should probably by this time next year be net income positive. That'll be a great turning point for the company. Lucas, what up, dude? He said MNST. Let's do it. Any consumer staple ETFs? Not really. I don't know any off the top of my head. I know Spider has one. It might be XLK. I forget it exactly. Let me just see if that's right. XLK. That is the nope. Okay, so here's Monster. Oh, MNST. Yeah, this is. I thought this was MicroStrategy for a second. Yeah, this is Monster Beverage. They get so much free marketing and free advertising. You know who's actually the largest shareholder of Monster Beverage? Did y'all know this? It's actually Coca-Cola. Coca-Cola owns 21% of the entire company. They were trying to make their own energy drink, and they just couldn't get a good one. This was like years ago. It was a great payoff for Coca-Cola. They're up like immensely on it, and it's created a lot of value for Coca-Cola as well. Yeah, this company makes good net income, literally 300 to 500 million in net income a quarter, and they just legit spend it all on buybacks. Like if you go to the net income, you ready for this? You won't believe. I think they bought like 5 to 10% of the company in just a year. So the net income is up by 14.9. So net income's up 15, but net income per share is up by 22. Like that's because there's 6% less shares that exist since the previous year. They are a monster in buybacks, and they have a monster balance sheet as well. Check out that balance sheet. No debt on this company, no dividend either, but they make up for, if they did have a dividend, if this company paid a dividend, it would have a 6% yield even at all time. Or if they switched it from share buybacks to dividends, I would have a 6% dividend yield, and that's their extra money. So anyway, I love Monster. They're kind of like an AutoZone where they just never go down. Every time I go to a gas station, there's like this one I go to, you can get 2 Monsters for like $4.79, and I don't get them much, but I get like a pineapple mango flavor. So it's healthy, right? What's a company to recommend for a first purchase? Hey, well, I'd actually go, not financial advice, of course, none of this is, but I just pick first off, I just pick the S&P 500 as the backbone of your portfolio. First off, buy the S&P 500 because a lot of people like get distracted and can't outperform it. So if you can't outperform it, first off, own it as the backbone of your portfolio. Then you play around with some individual companies. Once you learn more about what you're doing, I would buy some of the stocks in the S&P 500, and I do. Like I literally do what I say. I own a lot of the Mag 7. I own Amazon, Meta, Google, and a bunch of other S&P 500 companies like McDonald's, United Rentals. So invest in what you use. If you're on Instagram, Facebook, maybe buy Meta. If you're on an Apple iPhone, love Apple, buy Apple stock, or Amazon Prime subscription, buy Amazon. So yeah, I own Amazon. I own Coca-Cola, DocuSign. I own a lot of popular names. So buy the safe stocks. Like my largest holding in here, my second largest holding of all my stocks is McDonald's. I think that's a great value stock to just literally buy and never sell. Even look in 2008. In 2008, McDonald's didn't dip. It's almost a recession. It's recession resilient. I almost want to call it recession proof in quotes, but I mean, we go into a recession, McDonald's does good. Has anyone seen the new extra value meals at McDonald's? The $5 breakfast meal, $5 lunch meal. McDonald's is finally bringing back the value because they used to, in 2021, 2022, the prices at McDonald's were nuts, but now they have the value again. And McDonald's, if you didn't know, it's really a real estate royalty company. If you go spend $100 at any McDonald's, $4 of it goes back to this corporate stock as legit 100% margin royalty. That's why they have 30% plus net margins. There is no restaurant out there that has 30% net margins. That's because they're not a restaurant business. They're a royalty in real estate business. They also collect the rent. Even in a recession, if we're in a recession, they're still collecting rent they own the land under 80% of the stores. So they're still collecting that rent. Pretty cool. I'll stop talking about them. So let's see. CoreWeave and Amazon dumping. Is Amazon dumping right now? I'd believe it. Oh, well, not after hours, but yeah. Look at that chart the past couple of days. Amazon, I think, is worth looking into. If you have the intention to buy and never sell Amazon, just like me, buy it now. Not financial advice, but not as a huge position yet. Yeah, if you look at the top, this is called my buy and hold portfolio. Because once I buy a stock in here, I really just try and I've never trimmed, taken a single share of profit on any of these. I've just held the gains. Even on Powell Industries, I'm up 260%. I've never sold or trimmed a single share. I've just collected the dividends. Dude, my PE on cost, back on this cost basis versus how much they've grown net income, I paid 5 times net income based off my original PE for that company. It's insane. Okay, what stock about you? What is this one? What up, Sam? GoPro has made some serious moves. I'd be so careful with GoPro. Yeah, hey, we're not going to look at RR, Rich Tech Robotics. I think that one's hard to trust. Actually, maybe we'll go over them. Oh, should we look at GoPro? I don't know if we should. We're going to plug in my phone, though, real quick. Thank you. What up, Art? We just looked at Amazon, so if you give me a minute, we'll look at them in a little later. What's a good stock we should look at? Sam said NUKL. I've never heard of this one, so let's see what this is. It's actually okay. Oops, no search results. So I can't find NUKL, unfortunately, and I did try and find it, so I do apologize. There must be like an Australian stock or something. Two Trick, good to see you, my friend. What up, Ethan? You know what? Let's pull up Rich Tech Robotics. I'll be super quick about this one. Here's the one thing. If you're looking for a real robotics play, you're like, I'm buying Rich Tech Robotics because I want exposure to real robotics in the long run. Well, this one doesn't have any registered IP or patents. They're a $700 million company. You know, think about this. A $700 million company, and check out the revenue. It's $1 million a quarter. So, it's really hard to trust this one, and they lose net income every quarter. Luckily, they're doing the right thing. If we look at their balance sheet, how did it go from 57 million to 107 million in one quarter with no revenue? It's because they diluted you by 50 million, which is completely the right thing to do with all this momentum right now, because I know it's overvalued. But raise cash, beef up their balance sheet. That's great news. So literally, if you actually think about this from another point of view, I'm not trying to be overly negative. Here's the both case. Let's see the exact cash. We'll call it 90 million of cash. They have 90 million of cash, and the whole company's 770 million. So literally 15% of the entire market cap is their cash on hand. And wait, so think about that. 50% of their market cap is their cash on hand, and they're only burning through 4 or 5 million a quarter. Again, the reason they got that cash is from diluting you from the stock, but it's just so tough. If there is a rally on the stock, whenever the stock goes up, they will dilute you in the future. So you got to be careful with these small market cap names that are just struggling. Like, it could really take a couple years for you to really get some good profits on that one. I just don't know about the risk reward. Oracle, hey, what up, big mans? Yeah, Oracle, that one's pretty cool. What up, Wolfpack? He said Dutch Bros. Yeah, I think this one's a better play than Starbucks for sure, because they're actually holding up a lot better. Starbucks' margins are literally in the toilet, but this one is expanding their margin. Check this out. Like, for a restaurant in this environment, this is actually pretty impressive. The revenue's up 28 and the net income's up 73. So they're actually able to grow their net margin to a 9.2%, which is actually really fair, pretty good for a restaurant. 9.22%. That's actually double what Starbucks was, and that was real. And what I really like about Dutch Bros, and I'm curious to see how this grows, it's only 9% of the revenue right now, but they're high margin, 100% margin, royalty franchise fees. You go spend $100 or whatever at any of the Dutch Bros franchise stores, I think $5 of it, or I forget the exact royalty on it. I don't remember. It might have been $6 or something, but $6 of it literally goes back to the stock as a royalty, which is kind of cool. So actually, I like this one definitely more than Starbucks, for sure. I wouldn't have it as a huge position. I honestly like probably McDonald's a little more, but honestly, that one's a bit more growthy. Honestly, here's another cool one. If you're looking for another royalty kind of restaurant stock, Wingstop is another very interesting one. If we go to their net margin right here, what is their net margin? About 16% net margins right here. Oh, I used to break this down for us. Can I go back and see it? So yeah, look at this. 46% of Wingstop's revenue, 46% comes from their royalty revenue and their franchise fees. And then their company owned, like, this is like McDonald's. Like, literally 8% of McDonald's stores are like company owned restaurant sales. So anyway, Wingstop's a cool one. Maybe you could put that on your watch list. Okay. What up, Lukey? Oh, we got to look at Micron. I forgot to get to this one. Look at Micron, PCAR, GoPro 2. We'll try and get to all these. Sorry. Hey, Puck, dude, I didn't even see that. Yo, Puck, thanks so much for all those roses. Dude, he gifted like 10 roses. If you're still here, Puck, thank you so much. If you got a stock you want me to look at, let me know. So here's Micron Technology. This company's at an all-time high pretty much. You know, even though the stock is at an all-time high, they're pretty fairly, they have a pretty fair multiple compared to the industry average. Like, you look at NVIDIA's PE, ARM, Broadcom, AMD, the net income multiples, which is PE, are nuts. But look at Micron. The net income multiple is only a 20.6, which is really impressive. You won't believe this net income quarter that they just had. Wait, let me check if this was real. Here's how you check if it's real. You compare the net income versus operating profit, and it was totally real. The operating profit should be just slightly above the net income. Basically, the operating profit is the before tax revenue, and the net income is the after tax revenue plus any adjustments. Tesla does it all the time. So you don't even look at EPS or net income for Tesla because they do so many funny money GAAP net income tricks. So you always got to blend both together here for a full story whenever you're looking at financials. But this is huge. 3.2 billion in net income. Like, I think the reason they had such a slingshot effect, like the reason they're at an all-time high, is because just a year ago, like, it was so underpriced versus back here. This was a tough company to buy. They were losing $2 $1 to $2 billion in net income a quarter, but now they're making $2 to $3 billion plus in net income. Like I didn't think that net income was this good. I'm actually shocked the stock isn't up more, and they're only trading at 20 times net income right now. And that's not it's not 20 times net income propped up on some one-time adjustment. Like that really is like them just trading at 20 times net income. So that's where, and look at these EPS projections. The net income is expected to continue to climb higher. I'm going to re-add them to the top of my watch list. They're actually pretty interesting. Congrats if you own them. You deserve to be up on your position if you held through all of that, all the pain through the past years. So let me put them back on the watch list. Okay, cool. So PCAR is a cool company, someone said. What up, Luke? And then that's the wrong ticker symbol. PCAR. Oh, they're actually on my watch list. I do wonder why I added them. They're actually a $50 billion company. So that's actually a huge market cap. $50 billion company. They're well above their 2019 price. But look, they have been flat for a year and a half. Let's go look at their financials and see if we can find out why. So they're a truck company. 71% of their revenue comes from trucks. And actually, whenever you look at the financials, it usually explains why the stock isn't doing too well. Like compared to the S&P 500, the fact that this is flat in the past year while the market's up 30% isn't great. And this is kind of why. Their main business, their truck revenue is down 20% from the previous year. And yeah, dang, their margins fell too. So when revenue's down 15, net income's down 35. Luckily, they're still printing money. Look at that. They're making 500 million, 700 million still, but I don't love the huge decline. So we kind of want to see the growth come back for this stock. What's the yield? You get a 1.3% dividend yield. Cool. Okay. Hopefully that was helpful. So GoPro, hey, GoPro, pure momentum. I honestly think got to be super careful with this one. So look in the top right, the market cap, like the Chinese competition for GoPros is real and they're better and they're cheaper. And it's kind of like Chinese cars. We need to tariff we need to tariff Chinese cameras because it really has eaten GoPro. So if you look at the market cap, they're a $350 million company. And here's the thing, $350 million company that loses, 20 mil, 50 mil, 40, 300 mil that quarter. And how are the sales doing? And all those net income losses, in the past year, well over 100 million, the whole company is worth 300 million. And look at this revenue. This is a major decline. It's down 18% after falling 22, after falling, that's not great. Let me look at this on an annual basis. Well, yeah, be really careful on GoPro. I can see why they have it, but there is a lot of momentum right now. There's possibly money to be made, like swing trading. Is there a desktop version of this platform? Yeah, there is actually, Tobo. Yes, sir. Yeah, by the way, I'm on a brokerage right here. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio. It's the first link there. GoPro's being shorted. You know what? Let's go see the short interest. We can actually, that's what's cool. This is everything in one. Let's see the short interest down here. So yeah, look at this. 10.5% of all the shares are being shorted right now on GoPro. So yeah, high short float on them. Okay. Is there a reason gold is 3,700 an ounce? Yeah, gold is doing great right now. I know there's some war fears today. Increased war tensions. Yeah, so this is literally the commodity of gold. I pretty much not financial advice. I never recommend anything, but buying digital gold is all like literal commodity. IAU is the ticker symbol for digital gold. Is better than buying physical gold, especially in smaller quantities. If you're just trying to buy a small quantity of gold, like a little gold coin, you're paying at legit 20% premium versus the actual, you're paying when you go to buy it, you're paying a spot fee, and when you go to sell it. So IAU is the best way to get exposure to gold. If you got any gold chains, gold jewelry, maybe go hit up the pawn shop, get some cash, or I don't know. All right, so Mike said hood. Yo, this is my best performing stock of all time. I am up 700% on them. Hey, Tobo, thanks for all the roses there. He said, thoughts on the housing stocks? Oh, yeah, D.R. Horton. Yeah, well, look at them. I think Warren Buffett bought some of them. I know he bought Lennar, Pool. Warren Buffett sees something. He's buying all those home builder stocks and residential exposed. But here's Robinhood real quick. I use their platform as well. I will say that. I've given them a lot of transaction fees and stuff like that. So yeah, I have a Roth IRA with them too. Yeah, Robinhood has a cool Roth IRA thing. But Robinhood stock though, I do own, so I might be biased. But here's the metric: their net cumulative funded accounts is 26.5 versus 24.2. So that's great news. I know the Robinhood Gold subscription is gaining a lot of traction, but check out the growth of the business. Like the actual fundamentals are good. The revenue's up 45 after going 40, after going 30. So they're just on a streak of growth, and not just revenue. Like they did 980 million in revenue. Out of that 980 million in revenue, legit 390 million of it was net income. That's ridiculous, the margins the brokerages makes. Like you look at all the brokerages, Futu, Interactive Brokers, they have like crazy 40% margins. And Robinhood had a 40% margin this quarter. They're huge. They deserve the hype. They're definitely overvalued right here. I wouldn't touch them at this price, but I love them. I do own them. Here, I'll show you my position if you want. I regret, this is a stock that I kicked myself in the nuts for selling in the past. I regret every share I've ever sold to them. I'm up 782% on the few shares. Like, look at this. It shows me my soda. Yeah, I sold 50 shares at $36. Look at all these. I was buying it at 8, 9. Man, I miss these days. But anywho, so always, sometimes if you have a real winner and the financials are continuing to, are still what you like don't sell a stock even if you're up a crazy amount in them. Like that's why I'm glad I didn't fully sell out of Robinhood. I wasn't that dumb to fully sell out of Robinhood, but I was dumb to sell most of my position. Same with SoFi as well. I regret every share I've ever sold of SoFi. So anyway, let's keep going. DR Horton here. That's not the right stock. Is it DRI? No, DR. Hey, you're going to have to find me the ticker symbol for DR Horton. I apologize there, Tobo. Thanks again for the roses, dude. Okay. Let's see. Lucid. Yeah, hey, Lucid. Ooh, I want to touch them. UEC, though. I'm seeing some comments for UEC. Let's do it. This is actually one of the, what's it called? And hey, George, dude, thanks so much for the confetti again. We'll look at JBL. Yeah, we'll look at some of these. Thanks again, George. So yeah, here's UEC. They actually bought a uranium mine off of Rio Tinto a while back, and that was a great asset for them to own. And they're finally seeing some revenue from that. Go to the revenue right now. It's great, 50 mil this quarter, 20 mil last quarter, and nice. These year-over-year increases are very strong, and they have a really good balance sheet as well. So still has a lot of choppiness in the revenue, but one thing that provides, I think, is a huge safety net is this balance sheet right here. No debt, 150 mil of cash. So, but we are watching. They are still losing 20, 30 mil a quarter, but they're one of the better. Well, actually, they didn't have any revenue this quarter. Wait, hold on a minute. I don't know. Well, I'd be careful with that one, especially at all-time highs. But uranium is really really popular now because we're stimulating nuclear reactors, and what powers nuclear reactors is uranium. If you don't know, basically they literally split the atoms of uranium to literally just heat up water. Nuclear reactor is actually pretty simple. Well, kind of. But it literally just heats up water and creates it into steam, and that's how they get the power. But then it just heats up water. Okay, the URA ETF might be better as like a safety play, but my favorite uranium stock of all time is CCO Cameco, the number one safest, best play in my opinion for uranium. I have to do more research on UEC. I don't know what their projections are. Hey, someone said what happens is, hey, if you want to get this Appamon, it's in the link tree in my bio, the first link there. So this is actually a brokerage right here. It's where you buy stocks on. So yeah, link tree in bio, first link there if you want to get it. So most new semis have PAC car engines. Oh, hey, what up, Calvin? That's pretty cool. Today was not a good day. Oh, I'm sorry to hear that, Jack. Yeah, look at this right here. Everyone feels your pain. Look at this. Every stock in this portfolio is down. If I head over here to my Robinhood portfolio, something happened with Google after hours, so we'll look into that later. But every single stock in here was down on the day as well. I was down 1.3. So, and in our Webull account, we had a lot of big losers today. Let me see. Yeah, we're down 0.8%. We're only up 14% all time in here. Anyway, Sprouts Farmers Market continuing the declines. Ouch. What up, L? He said SWBI. Oh, wait, actually, is that okay? We can't oh, dude, I would cover that stock if last time I covered that stock, the TikTok stream got taken down. So my apologies. There are certain sectors I can't cover, sadly. By the way, best way to support me, I sell nothing, of course. As y'all know, I have no course book. I have no like private anything. I'm just on here giving my opinion. The best way to support me is just subscribe to my YouTube channel. Just type into YouTube Nathan Robert. You'll find my YouTube channel. Or it's in the link tree in my bio as well. But yeah, I'm streaming on YouTube as well. If you miss anything, you can replay it. And sometimes I talk too fast. But here's Lucid. This is a stock I wouldn't touch. Here's why. My reasoning is the financials. So it's a $7 billion company. Here's why the stock's at all-time lows. The financials explain this. It's a $7 billion company, And check this out right here. Bad news. They lost 550 mil this quarter, 400 mil, 400 mil, 900 million. Like, that's a huge chunk of their market cap. They literally lost 25, 30% of the entire market cap just in the past year. And they've diluted you all the stocks at all-time low as well. Like, they can't afford these net income losses, and that's why they're leveraging up. Their liabilities used to be 57% of the assets. Now it's 72. They can't afford these net income losses. They're unsustainable path. There's honestly a chance of bankruptcy. I hope not, but without a lot of dilution, and it's tough. Hopefully the Saudis can help them out. So someone said Reddit stock. Hey, yeah, I do own this one as well. Reddit is a bit overvalued right now. I'm up like 100% plus on them. They're one of my better performers. And honestly, this stock deserves to be at all-time highs. I know a lot of people think Reddit associated with like a meme stock and stuff, but this company is no meme. They have financials that I think will impress you. And it impressed me. I didn't even think they would be this good. I'm a shareholder, and it was honestly this quarter, the most recent quarter, that was like gangbuster earnings. I can't believe how good these Reddit earnings were this quarter. So I'll tell you why. Their ARPU, their average revenue per user, was up 48% year over year. So the amount of money they're making, the profits per user, is up 48%, which is crazy. But look at this. The revenue is up 77% after growing 53, after going 30. Like, who knew Reddit would be so growthy? Like, 77% revenue growth, and they're also the most profitable they've ever been. 90 mil in net income. That beat expectations. It was, the analyst expected 20 cents of net income per share. They reported 45. A huge double beat, a huge beat on revenue as well. Like the orange lines with the analysts expect. They're beating on revenue, they're beating on net income, and the net income projections are expected to continue their record. It's supposed to be 77. That's going to be like 200 mil in net income. Reddit's going to be making 400 million in net income a quarter in a couple years. Not financial advice, of course, and they have a freaking fortress of a balance sheet. They literally have no debt whatsoever, $2 billion of cash, and their cash is earning interest as well. Let's see. Yeah, 20 million of interest a quarter they're making on their cash. And the free cash flow, or let me go to the actual FCF number, is insane, the growth rates. So Reddit is a pure growth play. I love them. I might be biased because I own them, but yeah, I love them. So, all right. Have you covered this stock before? PL? No, I haven't. Let's, or actually I have. They're on my watch list actually. Look at that. They're at like a new 52-week high today. So yo, congrats if you own them. I guess if I read at the top here, it says Planet Labs to begin production of Pelican satellite in Germany. So hey, that might be some good, that's probably why the stock is going up so much, the future sentiment around them. Yeah, look at that beat this quarter. Analysts expected 66, huge beat to 73 million. They lost less net income than expected as well. So I can totally see why they gapped up so much on earnings. That was a big beat on revenue. So revenue's up 20, net income losses decreased by 40. So that's great news. This is pretty cool as well. And I forgot about this. Cool fact, Google's the largest shareholder, and I own Google stock, so I technically own some of them, but GOG, or Alphabet, just Google, owns 10% of all the shares, so the largest shareholder, so kind of backed by Google, kind of cool. What's so significant about uranium? Yeah, uranium powers, I would rather buy the nuclear companies, not the commodity, but uranium powers nuclear reactors, and I would, the best play, CEG, for nuclear. I cannot type. SNDK. Let me see if I can find this one. So this is SanDisk. So what up, Hades? So it's a $13 billion company. They've been on a nice momentum streak. Look at that the past couple weeks. That's insane. Let's see what they do. So this is where the revenue comes from. 30% China, 20% US, Hong Kong. What are their actual sales? So the sales were up 8%. So there was some, this was not on any earnings. So there was some sorts of news on these days that I don't know. So there was news that I don't know that made the stock go up a bunch. So without that, I can't give you a full picture here. So that probably wasn't too helpful. I apologize, but that rally is insane. Congrats if you own them. So, oh, hey, what up? TikToker said Rolls Royce, RYCEY. Yeah, a lot of people, what platform are you using? Yeah, hey, Arkansas, what up, man? Yeah, by the way, I'm on a brokerage right here. It's where you buy stocks. So if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure, but it's the lowest fee. It's a free brokerage. Here's the thing, like with Robinhood, you have to pay $5 a month to get the APY, but not this one. No monthly fees, lowest fee brokerage, $0 commissions. Anyway, here's Rolls Royce, stocks at an all-time high, and they're not a car company. They're actually a aerospace and defense business. And that's what sector is on fire right now. The aerospace companies, that's 50% of the revenue. The defense is 30%. So literally 75% of the business is aerospace and defense, and the profits are off the chain. Now, they are European, so they report in halves, but for the first half of 2025, the net profits is $6 billion in net income, up 3x. Like they're normally making 1, 2, 3, but it's $6 billion for the first half. Insane. And you get a small yield, I think. Yeah, 0.5% dividend yield, not too shabby. So they're a cool real estate royalty or aerospace and defense play. All right. Hey, Suzuki man, no way, the legend himself. Yo, what up, dude? Let's look at this one. Watsco. I believe this is like an HVAC play. Then we'll look at oh wait, hold on. There was a stock I was supposed to look at and I forgot to look at it and I feel bad. George, hey, George P. What was the stock you want me to look at? George P. If you're still here, let me know. I'm so sorry. He had a stock he wanted me to look at. So here's Watsco. Let's see what the yield is on this one. Wow. So first off, a great dividend play. You get a 3% yield pretty much. So very nice yield. And they're trading at 30 times net income. And this is a heating or an air conditioning, heating, and an HVAC play. So I do notice the revenue is down 6% year over year. So that might be one of the reasons why the stock did fall on earnings like that. Let me see what the revenue is right here. So yeah, total revenue combined. So when you combine all their businesses, the revenue is it's down 3.5%. So we don't like to see negative sales, and but they actually improved their margins. Net income went up. Wow! So they expanded margins despite that. So then grew it. The net income was $200 million. They're making good net income, $100 to $200 million net income. Let's see how much the dividend costs. So let's see. They made $216 million of net income this quarter, and the dividend cost $121 million. So they have a very safe payout ratio. And since they have some leftover money, they spent $11 million on buybacks this quarter. So that's kind of cool. ONDS, let's do it. So, oh wait, no. JBL, what up, dude? What up, George? Then we'll get to ONDS. I promise. So let's see. Hey, what up, Matt? How's it going, man? What up, Chris? So this is Jabil. I haven't heard of this company before. Looks like they fell 6% today. Looks like they just reported earnings. So, hey, we'll get to look at their earnings. They have been an insane performer since 2019. It was $40. Now it's 210. That's insane. So let's see what the earnings were. So they beat on revenue. They had a nice beat on revenue, but it looks like they missed on profits. So the net income, the EPS missed slightly, but they beat on EBITDA. So, let's see. So they're an intelligent infrastructure stock, and that business is up 50% year over year. Regulated industries, it's up 0.3. Connected living and digital. So when we combine the revenue, it's up 18% year over year. So revenue's up 18, and they're making good profits, 100 to 200 million net income a quarter. So that's good news. Very small dividend, but very low payout ratio. So that's cool. So maybe they're trading at 35 times net income. Maybe it was just that they're pretty growthy. Maybe the fact that they missed on net income, I don't know, maybe it's a dip worth looking into. That one's interesting. So ONDS, so I think this is like an autonomous driving company. Yeah, if you got another stock you may look at, let me know, George. I don't know if that was too helpful, but here's ONDS. Yeah, they're at an all-time high. That's insane. Or was that all-time high? Well, no, 52-week high, multi-year high, pretty insane. I think it's these next 2 quarters are what you really are going to want to watch because they did $4 million in revenue. It's expected to be $9 million year over year from that 2024 Q4, 4 mil to 9 mil. So there's a lot of growth expected. So it was at a record 6 mil, expected to go to 10 million. Maybe they're going to do 40 million of revenue a year on a low, and we're 2.5 billion. So Ondas Autonomous Systems. So maybe there's some kind of LiDAR company. Oh, do beware though. Or I don't know if this is a bad thing, but most of the revenue, 60% comes from Israel, then 25% the US. But check out these expectations. I'm curious to see what will happen the next couple of quarters. As they kind of finally start to prove themselves with actual, revenue. It's kind of easy to grow small numbers, 3 to 6 mil. Yo, Togas, what's up, man? He says, it's been a rough day. Yeah, man. Lots of red in my portfolio. Every stock in this account is down on the day, and in my Robinhood portfolio as well, every stock was down on the day. Pratt says, what software is this? Yeah, hey, by the way, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you actually go and deposit $100, we'll both get a little fractional share of NVIDIA. You don't even have to. You don't even have to deposit any money. You can just use it for, you don't have to deposit and buy stocks. You can just use it for its analysis. So anyway, let's keep going here. WSO is doing a lot of acquisition. So that's great news. That's great news. Drone play. Arch Aviation's revenues. Hey, what up, B69? How's it going, man? Jimbo said, please review Cintas stock. What is the ticker symbol for Cintas? Let me know the ticker symbol for that one, and we'll analyze it. NSSC. Let's do it. So, let's pull it up here. Yo, that one dude, what up? He said S&P Global. Yo, we got to pull up S&P Global as well. They have a shared oligopoly on the credit rating industry. Man, dude, I might have to reset the app right here. I apologize. My Wi-Fi is tweaking, bro. So anyway, here's NAPCO Security Technologies. Looks like they had a good earnings report. They had a nice gap up on earnings there. Let's go see what they reported. So, wow, that was a huge beat on revenue. They expected 44. They reported 50. They expected 26 cents of net income. They reported 33 EBITDA. So that was actually a great quarter. It was a triple beat. Really did beat on every expectation there. They are still net income positive, actually, that's great. They're making $10 million a quarter. It was down 15% year over year, but I think the reason the stock gapped up so much on earnings because the net income was expected to be way lower this quarter, and the revenue was expected to be much lower. So they beat on the low expectations. So, and they have a really good balance sheet. Actually, I'm liking everything I see here. Well, except the kind of slow growth. Revenue's up 0.78. That doesn't beat inflation, but again, that was better than what the analysts expected. That's why stock's up when the financials don't look. But revenue's up 0.7. Net income's down by 14. So they lost margins, but still making 10 mil a quarter, and they have a lot of cash and no debt, which is cool. CTAS. Cool. Let's do it. CTAS. Okay, Cintas. Let's check it out. Let me get my water real quick. So this company has been a really good performer, but they've been flat on the year. Let's go see if we can figure out why. They have a near 1% dividend, which is cool. So uniform rental and facility services. So it's growing single digits. That's not too shabby. It's up 6% after going 7%. So that's growing nicely. So let's see, the revenue is up 8.6, net income's up 8.6 as well. So they're literally doing 400 to 500 million net income a quarter, which is very consistent. That's what I like about this stock, how consistently, it's not super growthy. That's maybe why it's been flat for a year, just because, revenues, but they've slightly beat every quarter for the past year. They're beating on expectations. They're a financially sound company, making lots of profits, basically 500 million net income a quarter now. Hey, thanks, Shark. I appreciate that. Bo said TPCS is up 130%. Tech Precision. Well, yeah, hey, again, if you look at the top right, this is a $50 million company. We don't cover these kind of stocks, really. I'm not shocked to see such a small company move up so much, but you're right. Look at those moves the past couple months here. So congrats if you own this one. I'll be quick. Let's look at their financials real quick. The revenue's down 6% year over year. Not great growth, but it's probably just momentum right now why the stock is going up so much. I want to see the net income number. Man, and they're really giving me a tough time here to get this. I might have to reset the app real quick. Actually, they're barely losing any money, which is good news now, getting close to net income positivity. But Ranor, whatever that is down 1%, and their other business is down 7.5%. So it's just not growing. Is this on a phone? Yeah, we're on my phone right now. Yep. Sub to you. Hey, thanks so much, Dimitri. Thanks so much for subscribing. Yeah, hey, if y'all wanted to follow button, we stream every single day. We just look at stocks. I sell nothing. I have no course book, nothing like that. Just on here giving my opinion. Yeah, since WSO Business buys HVAC companies. Yeah, the HVAC industry is such a fragmented business. I kind of own their competitor. I actually own Comfort Systems, ticker symbol FIX. That's my largest holding. They are a serial acquirer. They just bought another. For fragmented market means you're not loyal to one. If you just need your plumbing done or HVAC installed, you're just gonna go whoever's local. There's like 1,000 or hundreds of thousands small HVAC businesses. Well, Comfort Systems comes and acquires all the mom and pop ones that don't really want to pass it down to their kids, and they let them know it's in good hands, and then in turn they get some Comfort Systems stock, and we're just done great. So anyway, but FIX is my favorite HVAC play. I'm seeing some good stocks here. Wait. Hmm. Axon, yo, this is a very interesting company. This company makes body cams for police officers, and I think like 50% of the revenue is like the government. Like, not just this is a drone company, a security, a defense company. I would love, 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 love to own this company if they didn't trade at a redonkulous valuation. Like, I'm talking like more expensive than Palantir type expensive, but they're great. Like, they're not making any money really. Well, it's not much. What's their net margin? 5% margin in the most recent quarter. But I love them for the growth in their industry. Like, I really, this is a never sell stock. I want exposure to Axon. It's a great company, but at a lower valuation. It's like Palantir kind of. Honestly, I might buy Axon before I buy Palantir if they're both at good prices. So here's a great cybersecurity stock. This is another company that I would love to buy. Look at Intel. Yeah, hey, Intel was up big today, maybe on the war news, because honestly, as you know, NVIDIA just designs their chips. Taiwan Semiconductor manufactures and makes all the chips in Taiwan, which is, 6 feet away from China. Any geopolitical warfare stuff happens, we can't have that. So we got to move some of that manufacturing, at least some of it, to Intel in the US. So anyway, here's Fortinet. This is a cybersecurity stock. I want to buy this stock too. This is another great one. And I love subscription model companies, and this is a great subscription model business. And they're in a great industry. If you look at a lot of the software names like Salesforce, Adobe, this cybersecurity stock hasn't been hurt as bad because of the industry. So check this out. We go to their security subscription. This is the best part. Like, it literally it hits a record every year, and it's extremely growthy. It's up 15% after going 30. And they're not just making, a lot of revenue, but actual profits, after tax net income. They're making $400 to $500 million in net income a quarter. And look at these growth rates. It's insane. So Fortinet's a great cybersecurity growth stock. Love them. How about electrical stock? Hey, my electrical work infrastructure stock, Comfort Systems, because actually, if we go to Comfort Systems right here, I definitely wouldn't recommend this stock right now. But if we go to their electrical business right now, their electrical segment, this has been booming. It's up 49% year over year to a new record. But my other electrical play is actually Powell Industries, POWL. They make the switchgear solutions for huge power load systems, like data centers, like utility companies, oil and gas companies are their main customers, which is pretty cool. Petrochemical. Are you more into fundamentals than technicals? Yeah, we don't really do. I do believe in the Fibonacci retracements and stuff like that. But yeah, we mainly just look at financials, because that's what really moves a stock in the long run. To like get a Palantir type return, or like any of the Mag 7, to get those kind of returns, like they have to have good financials like they do. So here's IDT. Let's check them out right here. So this is traditional communications. So yeah, this is kind of like reminds me of like a Comcast or something. This business is kind of just going to slow bleed out, kind of to zero, which is tough. I'm guessing they're trading at a low multiple. So watch out for the traditional communications business. But let's look at the fintech. Fintech, look at this one. So this is offsetting some of that decline. That one's up 22 after going 44 after going 30. So I actually like the growth on fintech. We want to see that hopefully eventually be a larger stake of their business. Their national retail solutions, look at that as well. Also really growthy, up 21 after 42. And then their Net2 phone. I don't know what Net2 phone is, but let's see what that is. That's 7% of their business. Let's also see what markets are. So 76% of their revenue comes from there. And that one's up 7% year over year. So interesting. Let's check out net income. So revenue's only up by 0.7, but they're making basically 22 mil a quarter. Oh, yes. Yeah, small market cap, small yield. I should have seen that coming. But yeah, you're really just... I don't love them for this traditional communications business, but the stock price has been doing very well. I mean... Well, it's the same price that it was back in 2003, but I mean, the past couple months here, it's been on a nice little streak. I don't know if I buy them for that kind of too slow growing. So here's S&P Global. If you've ever heard of the S&P 500, any ETF that uses that, like the Vanguard S&P 500 ETF, has to pay S&P Global a royalty, and the stock's been falling off a cliff. I don't know. There was some other company, one of their like main competitors, or reported earnings and it wasn't good, so they fell too. Maybe they're worth looking into because. By the way, on this app I'm using right here, this is really cool. All the data we get, like these orange lines to analyst expectations, are actually from S&P Global. If you kind of read at the top left, it says data from S&P Global. And it's not just because I'm on S&P Global stock. It's for all the other ones I'm looking at. So yeah, they have a lot of different businesses, like their commodity insights, their indices, the ratings. Their credit rating business is the one they share with Moody's and Fitch, which is pretty cool. Impossible to replace. They have a nice moat, 1% yield. I really like S&P Global, and honestly, let me add them to the watch list. They're a quality stock. You get basically a 1% dividend yield. They do over 1% in buybacks too. This stock more expensive than Meta. Don't buy. Wait, S&P Global is I believe that. Well, let me guess, 33 or something times net income. They're trading at 37 times net income. Okay, yeah, but yeah, they're not as at risk to advertising like Meta is. The reason Meta and Google can't trade at insanely high multiples is because if we get another advertising debacle like we did in 2022, the reason Meta fell so much in 2022 wasn't because Apple didn't let Meta collect their data anymore. That was like maybe a small percent of this. It was because the advertising market collapsed. Let's keep going here though. I love Meta. Oh, by the way, I'm a shareholder of Meta. Let me tell you. I love Meta. I love Google. I love their valuations. I love the dividends. I love the share buybacks. I love the CapEx. Dude, Robinhood, bro, please. All right, there we go. Had to reset that. But yeah, we got 5 shares of Meta. We're down on every stock in here except Google. Google after hours did some sort of news, so they're slightly green. But yeah, we were down on every stock in there today. All right. Let's see. Ooh, this is a cool one. Let's see. Guron said RTX Raytheon. Yo, this is a nice aerospace and defense company. And yo, Winter said what happens. Yo, by the way, this is a brokerage. It's where you buy stocks on. This is my favorite one. I keep my cash in here too because it earns the daily interest. But yeah, it's a brokerage. It's in the link tree in my bio, the very first link there if you want to get it. Use my affiliate link. I'd appreciate that. Helps out the channel and helps you out. Well, actually, if you sign up, we'll actually both get like a fractional piece of NVIDIA. Anyway, here's Raytheon though. The aerospace and defense stocks have been on fire. I love this industry. I think this one's a bit maybe overvalued right now, like the whole industry is. But yeah, they have a 1.6% dividend, even though the stock's at an all-time high. So that's pretty cool. They own like some of the best aerospace companies out there, like Collins Aerospace, Raytheon, Pratt and Whitney. Like these are great businesses to own. They're beating like crazy on expectations. Like they're beating on revenue. The orange lines are what the analysts expect. They beat on revenue. These net income beats are crazy as well. They expected $1. They did $1.20. So I can see why they're at all-time highs. I do like the IVV iShares Core S&P 500 ETF. Let's go look at what it holds. You know, ETFs just are basket of stocks. Yeah, basically the S&P 500. Yeah, S&P 500 is buy and never sell it. It'll 8% CAGR, hopefully, like it's always does. So EHB said ACN, they reported earnings today. So this is Acupuncture or something like that. Yikes, look at the stock the past couple months here. It has not been doing too swell. Let's go see if we can look at their financials and sniff out what happened here. They're trading at 19 times net income. I'm guessing the growth has slowed whenever the multiple collapses. Look at that expectation on the net or the EPS, which is just net income. They missed on their net income expectation, but it's not the end of the world. Okay, so revenue's actually not too bad. The revenue's up 7%, you know, mid-single digits, but the net income fell by 15, which means the margins did fall a bit. You know, revenue's up, but net income's down. That means net margins, yeah, fell 22%, but and it really did. Like that wasn't like some one-time adjustment. Like the net margins really did fall that much. So, And anyway, they're probably I like that they're still making like this is crazy money. They're legit making $2 billion net income a quarter. But hopefully they don't continue to miss on net income like that. Maybe they lowered maybe they lowered guidance or something on earnings too. Hey, Constitution Andy, I really appreciate that, man. Hope you're having a great day. Rollover IRA will probably be green tomorrow. Hey, nice, dude. What is B and M? Hey, what's the ticker symbol in WK for that? Um, Snap-on is boring but profitable. Yeah, this is your tool company. Actually, let me pull up Snap-on. They make like drills, just like stuff like that. And the stock's done surprisingly well. It's a nice dividend growth play. Like on top of the stock doing this well, every year you're also, and it's more than this because as stock price go up, the yield looks lower, but most people bought lower. You get 2.5% of your money back in a qualified dividend, plus the nice stock price appreciation, plus the low multiple. They trade at 18 times net income. That's because they just sell a commodity, tools and stuff. But one thing I really like is their repair business, the repair systems. It's like reoccurring revenue. It's more safe than just like kind of cyclical tools like Snap-on Tools Group. Like look at this, only up 1.8. It was down 8% last quarter. So anyway, I like how just consistent they are. Like even though the net income's down 7, I think analysts expected that. Actually, this is oops, sorry. Even though the net income is down year over year, the analyst expected the net income to be down, but it's down less than expected. Anyway, crazy. Let's see here. They remind me of like a United Rentals. Pepsi stock. All right, we can look at Pepsi stock. So Pepsi, we'll be quick about this one. What are you using? Yeah, hey Justin, I'm on a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there if you want to get it. It's my favorite software to like really analyze a company. Like I have Robinhood, I have Webull, but this is the best app to really learn and analyze a stock fundamentally. And it has like the lowest fees. Anyway, here's PepsiCo. What I really like about them is the safe dividend. You get a 3.9% dividend. They raise their dividend every year. But one reason I think Pepsi has been flat for 6 years is because of just the slow growth of the business. But they did just acquire Alani, which is cool. Or no. They just took a stake into Alani, or which Celsius, which owns Alani. But look at the revenue. This is one thing investors don't love. The revenue is only up 1% year over year. Like that doesn't really beat inflation. The revenue's up 1, and the profits are down by 9. So the margins did follow a bit, but still they're making $2 to $3 billion a quarter. The dividend's still safe. A little higher payout ratio than I'd love, but hopefully we can see the growth come back to Pepsi. Same with Coca-Cola. Same with all the food stocks. It's not just Pepsi that's struggling right now. Like a basic General Mills. Look at their stock. So, or even the restaurants, like everything food adjacent. Look at Wendy's. RIP Wendy's. Did you know Wendy's is the same stock price that it was, back in 2007? Like that's rough. It's rough. Oh, Keurig Dr. Pepper too. I wish I could give more thoughts on this, but I'll kind of have to wait till the spinoff happens for Keurig Dr. Pepper right here. So KDP, this is Keurig Dr. Pepper. Look what just happened the past couple months here. They acquired Keurig, but now they're spinning it off. Keurig's a cool asset to own. They get a lot of reoccurring sales from the K-Cups. But they kind of lost their patent. I've seen people sell like off-brand K-Cups, I guess, and like reusable K-Cups. But anyway, I guess investors just aren't happy with this one. Honestly, I think they're worth looking into. Like the two businesses separate. Like if the news is, if they lose this much valuation just on the news of them splitting, like you're still going to have the same ownership in both companies. It might be worth looking into. I don't know. I do love Dr. Pepper too. What is Xiaomi? Hey, what's the ticker symbol for that stock right there? Is this Yahoo Finance or Robinhood? No, hey, this is a brokerage right here. No, hey, this is a broker called Moomoo. Yeah, hey, if you want to get it, it's in the link tree in my bio, the very first link there if you want to get this brokerage I'm on. It's where you buy stocks and stuff on. So anyway, here's RMD ResMed. I actually have them on my watch list. The stock has done very well. They're a $39 billion company, so they actually have a really big market cap. Sleep and breathing health. Well, that's important. It's actually it's doing pretty good. It's up 10% after going 10, after going 15. So the growth's actually not too shabby there. Let's see what the revenue is. So, or actually the profits, So the net income is up 30. No way. They're expanding margins. So check this out. Their revenue grew 10%, but their net income grew by 30. So what that means in English is their net margin went from 23 to 28. So even though the net margin only went up by 5%, that's huge when you're doing over $1 billion in revenue a quarter. Like that's how the margin, that's how you make insane money. So great balance sheet as well, deleveraging, cash flows insanely growthy as well. I really like RMD. I can see why they're doing good. How much have you invested? No, I've invested like 60K total between my like three portfolios. Um, Train Technology. Hey, Train Technology, dude, they make these incredible like modular HVAC systems. Like they're all over my college campus. These huge Train Technology machines. They're on my watch list. Over them, I chose Amphenol and Comfort Systems, but this is still. I honestly, I wish I bought them too because they're just a great company. They service them as well, so they're servicing. Like, look at just their servicing business. This is what I love. It's reoccurring, hits a record every year. It's not supposed to be super growthy, but it's up 13 after going 16 after going 9. It grows every quarter. So, and they make so much consistent net income. Look at this: 700 mil, 600 mil, like of after-tax net income a quarter. Train Technology is a cool S&P 500 company as well. What trading app is that? I really like their. Hey, Kiwi. Yeah, hey, again, this is a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. Sorry. I should like pin a comment for that. Yeah, hey, if anyone wants this app I'm on, or if you want to use my affiliate link, it's in the link tree in my bio, the very first link there to get this brokerage. Or you can just type it into Google. Just a broker called Moomoo. So let's, okay, okay. I hope I can find this stock for you. Ticker symbol, Xiaomi. Okay, we found it. Wow, okay. Thanks. I got you. So this is an ADR. So obviously they're at an all-time high though. So congrats if you own this stock. They have done incredible. Let's go see what their financials are doing. I hope they give us some financials. Let's see if this app is clutch. It is. So we're going to convert they're a Chinese company. So we're going to convert their currency from Chinese yuan to USD. Let's see. Smartphone shipments. Oh, so this is a smartphone company. Smartphone market share. This is cool data. You know, they have a 15% market share. Vehicle delivery. So they're in vehicles too. So they're in smartphones. Number of devices, active users. Monthly active users, 600, 700 mil. So yeah, 67% of the revenue is from China. So they sell smartphones. Okay. Let's just check out net income right here. This is in USD. They report in halves because they're Chinese, but yeah, they made 3.2 billion in net income for this half. So they're making like 1.5 billion in net income a quarter. And they're a 1.5 trillion dollar company. They're huge. They're half the size of Apple. So basically Chinese Apple. And Tesla, because they make cars and smartphones. Huge smartphone market share there. Hey, what up, Jello? Good to see you. Okay. Are you on Facebook? No. Hey, yeah, the only thing I'm on is TikTok and YouTube, and this is my only YouTube channel, my only TikTok. So watch out for people impersonating me. I'll never follow you. I'll never DM you. I sell nothing. I have no course, book. Watch out for people impersonating me. Okay, yeah, let's look at Amazon. What up, Dat? So Amazon is a stock I do own in this portfolio, actually. If you look in the top left, it's called my buy and hold portfolio. Because once I buy a stock in here, I try not to ever sell it. And Amazon is a stock that I think is a buy and never sell play, in my opinion. It's also like an ETF in one. They're an e-commerce play, book play, like subscription play, satellite, cloud. They're the number one cloud service provider in the world, number one market share. Their AWS business is huge. The list goes on. So here's what's so cool about them, how they're expanding margins. They're super profitable. I love how CapEx heavy they are. Their cash from investing numbers are insane. They're plowing like 30, 40 billion into new assets a quarter, into AI right now, in chips mostly. But look at this revenue. The revenue's up 13, but the net income is up by 35. Again, another company expanding margins, and it's so important, the margin on this company, because of literally doing 160 to 180 billion of revenue a quarter. I think that's the most out of any company out there. I mean, that's insane. And the profits on that are 18 to 20 billion in net income a quarter. So pretty cool how they're expanding margins. I love all their businesses: e-commerce, AWS, subscription, Prime, grocery store. It's like an Instacart, a UPS, a Walmart all in one. Amazon is legit. It's just a never sell stock. Amazon, if you have the intention of buy and never sell Amazon, it's worth buying even right now. It is worth buying right now. Not financial advice, of course. Nothing to this is. I'm not an expert, just a college student. But yeah, hey, we just looked at Pepsi. I apologize. By the way, if you missed anything and want to replay it, I'm streaming on YouTube as well. And literally just like 4 minutes ago, we just deep dive into Pepsi. So Guron said, APH, is it a good time to buy? I actually don't think APH is a good time to buy. This is the copper cable company supplying NVIDIA their copper cables for their new NVLink spine product. NVIDIA's it uses not just that product as well, but the spine product uses 2 miles of copper cables in this little box. And I decided to buy another share of this at 107. I'd really love to buy more. Honestly, under 110 would be ideal for me because I'm looking to buy more. I'm saddened it's such a small position for me for how much I love this stock and how much passion I have about Amphenol. They really are a beast of a growth company. Like, I'll just show you the numbers for yourself and you can just draw your own conclusion. What other companies doing this? They've also just acquired a bunch of businesses, but the revenue's up 56. So revenue's up 56 and net income is up 108. So look at the margin expansion here. Net margin is up 32%. Record net margin. It's never been over 19% year over year. Or it's never been over 19% before. And all three of their businesses are booming. Their communication ones. How's their harsh environment solutions doing? It's up 38% year over year. Everything about them is growing. Even right now, they have a 0.5% yield. They raise the dividend every year. They just acquired CommScope. The growth is going to be even more. The revenue is up 55% year over year. They just acquired CommScope, or 80% of their assets, their broadband division, and not just CommScope. They've acquired 2 businesses just this quarter. So there's so much like future good news for Amphenol. I promise I'm looking to buy more, but under 110 would be really ideal. My current job just merged with Amazon. Yo, that's so cool. Really? That's awesome. Hey, hopefully get some stock-based comp and buy some Amazon. Dividends? Yeah, I love dividends. What up, GT? BP PLC. So I don't love BP. Out of all the dividend stocks out there, I'd rather buy Chevron or Exxon. Like, BP is the same price that it was back in 1997. They've been one of the worser performing oil and gas stocks. So in my opinion, and they've been one of the worser ones since 2019. Like, Chevron and Exxon are up crazy since 2019. BP isn't. So in my opinion, they have a higher yield, but I don't think it's worth it. I'd rather go with Exxon or Chevron. And that's not you have to pay an ADR fee for that one. Maybe a K1 tax form with that one, unlike all the other normal like Chevron stocks. What application are you using? Yeah, hey, CL, again, if you want to get this app I'm on, it's in the link tree in my bio, first link there. It's a brokerage where you buy stocks on. So improvement, did you say HOWL or POWL? Because I hope not this one, because this is a $92 million company. It's a $2 stock at all-time lows. So the whole company's worth $90 million. Ooh, they better have sales. Revenue-less company. Okay, so don't touch this one. They're losing 20 mil a quarter. The whole company's worth 90 million. So when you lose 20 mil or 17 mil, that's a huge chunk of their portfolio. When you add it up, they've lost nearly their entire market cap just in the past year in net income. And when you lose net income, that money has to come from somewhere. So look what that's doing to their balance sheet. Assets decline. And all this for a revenue-less company. They have no sales. I don't think their product's FDA approved or wouldn't touch them. So I'm going kind of quick here because I'm getting toward the end of the stream and I get a little crazy, so I apologize. Okay, how do you read financials? Oh yeah, hey, I mainly, the way I've been doing it on this whole live stream, like I have a YouTube video on how I do it. Just look up on, I don't have a course or book on how I teach this. It's just all on YouTube. It's just how I do it on my lives. So only energy stock I like is EOG. Yeah, this is honestly my favorite oil and gas stock. You're looking for an oil and gas stock, ExxonMobil, Chevron, and EOG. EOG is one of the financially most disciplined oil and gas stocks. Again, they trade at these low oil is a nice diversification asset. It won't outperform the S&P 500 in the long run. It's oil. It's a commodity. Trades at low multiples. But you want it for like right now environment when there's war fears, currency fears, inflation fears. Gold, oil does good in those times, and in the meantime, you just get a 3% yield. So EOG is a nice one. Chevron, Exxon, those are my 3 oil picks for you. I'm up 60% on Rocket. The PE ratio is 400 plus. Is that good or bad? It can be bad. You really want to you want to do a 2. You should look at a 2-year out EPS multiple. Look at the 2-year out EPS projections. One reason why Rocket has Rocket Mortgage, which is a mortgage loan company, they really benefit from a lower interest rate environment. They originate the loans and refinance them, so they can, like, as you go to a lower interest rate environment, they collect a fee every time someone's trying to lower it. But Yeah, look at these projections. Like it looks like there's a lot of growth expected. The revenue in 2024 Q4 was 1.1. It's going to be 1.7. So one reason a company can have a high multiple is because they're high growth, and it looks like the growth is here. Yeah, net income's a little wonky. Maybe you do like an EBITDA multiple. I don't know, but yeah, the mortgage companies are differently valued than your normal stock, just because they're so forward looking with interest rates. They're so interest rate sensitive. Howell just got approved for the. Oh well. Oh, okay. So yeah, yeah, I am Dimitrik. Yeah, hey. So let's see, CoreWeave stock. Yo, Oliver, you know CoreWeave is actually in the Nvidia portfolio. Nvidia. Oh, hey, yeah. We'll look at Sprouts Farmers Market as well after this. Um, but CoreWeave is the largest holding in the Nvidia portfolio. So I believe Nvidia is the largest shareholder now. Yeah, CoreWeave just did a deal with OpenAI. Like you can't make this up. Like they've literally benefited from being in the Nvidia ecosystem. CoreWeave and NVIDIA go into a deal, and now NVIDIA gets CoreWeave a deal with OpenAI. Or no, I mean OpenAI just go into a deal with NVIDIA. Now NVIDIA gets a deal with CoreWeave, the data center play. But anyway, one thing I love specifically about CoreWeave is how growthy they are. Like this is an insane growth stock. The revenue went from 400 mil to 1.2 billion. That's a 3x increase. In the analyst expectations, this was a record 1.21 billion. The analysts are expecting it to just continue to climb, 1.8 billion in 2 quarters. So I'd like Corey for the growth. Oh, I forgot to show. They're burning through money. They're losing like 2 or 300 mil a quarter, but watch out for the net income losses. But I wouldn't have that as a huge position. What is ACVA? Let's check this stock out. Oh, this one's actually on my watch list right here. So this company's at an all-time low pretty much. So that is unfortunate. Let's see if we can figure out what happened here. Why is the stock at all-time lows? What are they worth? So a small one, $1.7 billion. So auction marketplace revenues. So actually the auction revenue has been doing great. Let me go to annual basis here. It's at a record. Whoa. So that's up 22 after growing 65. So that business is growing very nicely. Their other marketplace business is up 24 after growing 30. Let me check out the profits here. So revenue's up 20. Oh, so they are losing net income, but this is not a big deal. This is actually great news. The net income loss is narrowed by 60%. That everything here is headed in the right direction. I actually don't know the reason why this stock is falling so much. Like there could always be something random that I don't know. Like maybe there was some new tax law that hurt some, or I had never. There's always I don't know, but it honestly, from a financial point of view, and financials, in my opinion, that always outshine in the long run. I think this one might be worth looking into. I wouldn't have it as a huge position, but I don't know. If you want exposure to auction marketplace. Maybe that's a high margin business where they collect a little fee there. Hey, try not to spam there in the chat. I'll try and get to all these stocks here. So let's look at SFM, and I want to get to PayPal too. Remind me to look at PayPal. I do want to get to that one, but this is Sprouts Farmers Market. That's a stock that I actually do own, and look at them at the top there. We are down 16% on our Sprouts Farmers Market. We actually just bought a few more shares of them. There you can see at $119. Of course, anyone can relate to this. As soon as you buy more of the stock, it goes down even more. So down 4% on the day. Here's why, not financial advice. I just bought this one. I think they're worth looking into if you're looking for a grocery store. Because one thing you look at for grocery stores is the net margin, and they have had insane pricing power, like abnormally high margins for a grocery store. Kroger, at very best, Kroger is lucky to have a 3% net margin every quarter. Well, they're doing. I honestly think it's because they're more healthy oriented. People are willing to spend more at Sprouts Farmers Market because they're more healthy. But anyway, if we look at the revenue, they're just growthy grocery store. Revenue's up 17. Revenue's up 17, but net income's up 40. Again, that's that net margin expansion that I'm talking about. And also, they have no net debt. And the main way they return money to shareholders is via share buybacks. You won't believe this. Since 2019, you ready for this? You're not going to believe me. Well, maybe you will if I zoom out on the chart. Since 2019, I don't know many other companies that have done this. There's not many, maybe AutoZone. They have bought back 25% of the entire share count since 2019. Literally 25% less shares exist. So if you bought this in 2019, you own 25% more ownership in the company. You get more net income. You get more EPS. Like there's less shares this is a way where there's less shares that exist. So more net income is given to you. I don't. Anyway, it literally forces the share price to go up. That's one cool thing. I like them. I'm assuming you don't trade options. Yeah, I don't really do options. I haven't done an option over a year, so yeah, I kind of stay away. I'm not good. I'm just not good at options. Lost a bit of money doing that, so I just don't do it. Hey, Zone, good to see you, brother. Here's Rivian again. The reason the stock's at an all-time low is because they're a money burner, and it's tough to buy. It's really tough to really trust this one right now because if we go to their net income, like literally they lost over $1 billion in net income this quarter. Like just for eternity, they lose like half a bill to $1 billion a quarter. Luckily, it's getting somewhat better, but nowhere near like safety. Like they lost $1 billion this quarter. They're worth $19 billion. That's over 5% of the entire company. I like the net income losses scare me. But one thing I do love about Rivian is Amazon's the largest shareholder. Porsche owns a big chunk of them. Let me actually show you that real quick because I think it's interesting. If you go to shareholders right here, yeah, Amazon.com, and I own Amazon, is the largest shareholder. So they're kind of backed by Amazon. Anyone seen those electric Amazon delivery trucks? They're all over where I live. But the Porsche one, it's because they're factories here. But Porsche owns 12% of the shares too. So that's interesting. But yeah, they have a lot of orders, like just infinite orders from Amazon, which is kind of cool. And Amazon might acquire them one day. I really think that if they can really turn into like a EV, like Amazon could like acquire the rest of the shares. I first off love that I wouldn't touch Rivian if Amazon wasn't partnered with them. If Amazon didn't have a shareholder stake in them, with those orders of the trucks, like I wouldn't even touch Rivian. Okay, sorry. Let me get off them. Joel, what up, dude? He said OSPN stock. What is this? Oh, we got to get to PayPal too. PayPal is a buyback play. I'll show that. So $600 million company. The stock is actually the same price that it was in 1999. So you bought the stock 2 decades ago. You're down on your position, unfortunately. But it looks like finally, well, let me point this out first. The revenue's down year over year. So revenue's negative 1.7%. But good news is is that real? Yeah, that's real. They're making net income every quarter. Basically, there was a little one-time adjustment that one quarter, but they're pretty much making 8 to 10 mil in net income a quarter. And balance sheet's all right too. Like, are they? No, they're not diluting you either. Whoa, okay. So actually, it's really not the end of the world. I love that they're making net income every quarter. They're trading at 10 times net income. Actually, they're not too terrible. And Zone, remind me to look at Grab. It might be a while, might be 5-10 minutes because I just looked at them. But here's PayPal right here. This stock right here. What's this? From a technical point of view, this app is saying there's a bullish continuation wedge with a 95% chance of a rise probability, but PayPal looks like DocuSign, like Peloton, like Roku. Had a huge spike in 2021, and it's just been down bad ever since. And since the share price is so low, PayPal is buying back their stock like crazy. They bought back like 7% of all the shares. Yeah, hey, Sammy, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But sorry, my Wi-Fi is terrible right now. But check this out right here. If we go to their net income multiple, which is PE, they're trading at 14 times net income. This is like your commodity multiple where they're not, this multiple implies that they're not really expected to create or lose you any value at 14 times net income. And that's because they've really slowed the growth down. If we look at the revenue, like 5% revenue growth, just barely beats inflation. So revenue's up 5%. But the good news about PayPal is how much net income they're making. They're easily making over $1 billion in net income a quarter. So what is PayPal doing with $1 billion a quarter since they have no dividend? Well, like I was just hinting at, they're deploying it into share buybacks. I mean, easily over $1 billion. They're spending more than they make a quarter on buybacks right now. But because it's so oversold. But check out what this does for you. If we look at the net income is up by 11.7% year over year. So net income is up 11.7, but the net income per share is up by 19 since the share part of the ratio went down. So pretty cool, the buybacks. But I know I get that. Someone said a value trap. I kind of get that too. I don't expect PayPal to outperform in the long run. Like maybe if you buy here, you might get 5 to 6 to 7% average a year from now. I don't know. But they look like DocuSign, for example. Like if you look at DocuSign, like again, they peaked in 2021 and then have kind of just like been way down since. We kind of want to see the growth come back. You know, PayPal, single digit revenue growth. I don't love that. So that's why I don't own any. Hey, what up, Juan? How's it going, man? So ARM, hey, actually, let's look at ARM. ARM is really real estate. I completely forgot I bought Grab because of you. Hey, that's what's up, Grab. Hey, of course, none of this is financial advice. Of course, I didn't tell you to do anything. You saw the good financials and you just did your own research. So let's pull up ARM Holdings. You know who actually owns a lot of ARM? Believe it or not, is actually Nvidia. 4% of NVIDIA's portfolio is an ARM. Obviously, their largest holding is CoreWeave. But one reason I think ARM has been flat for basically a year is just because they trade at such a high multiple, net income multiple. But one thing I really like about the stock is they're really high margins because this is really a royalty play. Because if we go to the like legit Reddit type margins, their gross margin is a 97%. It's insane. That's because a lot of their revenue comes from their 60% royalty and licensing revenue. That's all 100% margin. Like, it's insane. 42% comes from US. They make like the energy efficient chip software, whatever. Taiwan 15. So anyway, I love the fact that it's such a high margin industry. They're making net income. They're still getting their net margins kind of fixed. This should increase over time. Like, net margin decreased by 48% year over year. But in revenue's up 12 after growing 40. So I really like ARM. They're on my watch list, but multiple is still too high right now. But I love the business. Love them. I'm actually going to add ARM back to the top of the watch list. I actually would like to get exposure to them eventually because I really do like their business model. Let me unadd them and re-add them. That's the kind of stock I like. I want to find them on a dip. This is the kind of stock I want to own. I like a high margin business like that. Okay, can we look at B? And I think that's Brookfield Asset Management or something. So yeah, Brookfield, they're like an asset manager, I believe. And they're doing great, kind of like BlackRock. If you look at BlackRock stock or something, or Blackstone, all three of these look very similar. They're all doing pretty good right now. I think they have like a 1% yield or 0.5% dividend yield on them. Not too shabby. So yeah, just like BlackRock, it's private equity, infrastructure. How's their infrastructure business doing? I'll give it one more second to load, and if it doesn't, then just rip. My Wi-Fi is usually not this bad. Someone must be like doing something. But actually, that's really growthy. It's up 9% after 22. Good asset management, kind of a higher margin business, But the revenue is down 21% year over year, but the profits are great. Yeah, this is what you want to look at. You don't look at net income for these pretty much ever. You look at the operating profit. They're making basically 3.5 to 4 billion of after-tax net income. So you don't look at a PE ratio either. So they're making 10 per year. They're actually kind of trading at like 13 times adjusted net. It's highly adjusted profit. They're trading at 13 times highly adjusted profit. I can see the light at the end of the tunnel there. Okay. I once hurt my arm when it was in what up, Suzuki? Marvel. That's another chip play. They're you're really watching the next quarter for this stock right here. Marvel Technology is up 5%. Yeah, I've been expecting this. The forward multiple is so important here, and really it's the next quarter. Heavily watch next quarter because look at this. They just transitioned basically from a profitless company to profits. If we zoom out, they used to lose a couple $100 million a quarter, but now they're making a couple $100 million net income. $200 million this quarter, and that $200 million net income was 22 cents of EPS. Well, next quarter they're expecting $1.40, which is going to be an insane net income quarter. So I can't wait to see what happens next quarter. So I expect a volatile next 3 months, and I bet the market's really starting to price in like how good maybe next quarter will be, especially after Micron's insanely good earnings. Micron had beast of earnings. SoundHound, should we look at SoundHound? Actually, let me look at this one first. TTWO, this company owns Rockstar Games. So if you've heard of GTA 5, Red Dead Redemption. This is the stock that owns that company. And if you didn't know, GTA 6 is about to be released, and that's why this stock is doing so well. If you look at their financials, they're not doing so well financially right now, but the reason the stock is at an all-time high is because of the future growth expectations. They're about to release GTA 6, and whenever they release that asset or that game, it's literally going to create them billions of revenue that quarter. So there's this future expectation of so much revenue to come in the future from Take-Two. That's why the stock has rallied so much, but I will say, I think everyone knows it at this point. I think it's pretty much priced in, and I wouldn't touch this stock really over 225. It looks bit, but anyway, they're cool. Ooh, SEZL. So yeah, SEZL is, I recommend, not financial advice. Put this one on your watch list. If you're looking for a growthy company, for a new growth stock in the fintech business, like they've already seen a lot of growth, but in my opinion, this dip creates a nice opportunity. I think this is the kind of stock that's going to continue to grow in stock price because of the good financials. Check this out right here. If we go to the revenue right here, it just hit a record. It's up 76% after going 60, after going 20. It hits a record every year, every quarter. And the best part isn't the growth of the revenue, it's actually the margins. So out of this 98 mil of revenue, like this is insane. If we go to the net margins, they have 22 to 35% net margins every quarter. Extremely profitable company, deleveraging their balance sheet. Like the liabilities were 76% of the assets. Now it's only 62. So financially, and I'm a believer financials outshine in the long run. Um, I think they're going to be a winner in the long run, and they're worth putting on your watch list. Put it as a small position now. I bought 10 of Sezzle. Hey, nice. Snake said, what app are you using? Yeah, hey, Snake, what up, man? If you want to get this, I'm actually on a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio, the very first link there. They're pretty cool. Another stock, kind of like, honestly, I would own Sezzle. I would if I didn't own Dave, which is pretty much the same thing. So I actually own ticker symbol Dave. Pretty cool. Okay. Unity's been popping off. Unity, unfortunately, I think you can't buy them one. Let me know if I should look at Unity. They're not great. Actually, we'll look at Unity. We'll pick it over SoundHound. Or should we pick SoundHound? You know what? We'll pick SoundHound. Unity makes the game called Rust. If anyone's heard of Rust before, Unity makes Rust, which is pretty cool. Okay, SoundHound AI, this is like an audio AI subscription model company. And so basically, if you're an owner in this stock, most likely you don't look at financials, or the average investor in this kind of company. But if you do, pay attention to this number right here, because this is what has really driven the stock. And they had a huge beat this quarter on revenue, and that's what led the stock to go up so much. The revenue, the orange lines, what the analysts expect. They expected 32. They reported 42 million. And what is this company? They're a subscription model business, and their subscription model revenue has been booming. If we scroll out to like a year ago, this was a huge nothing burger. It was just like 400,000 a quarter. But look at the growth. It's at a record. It's up 800% after growing 800% to a new record, up 32 million. And at this growth rate, like, what's it going to be the same time next year? So that's what's pretty cool about SoundHound AI, just kind of a growth company. But I would be careful. I'm not, like, these net income losses are scaring me a bit. They are losing, 40, 50 mil a quarter, but it's okay as long as they can keep up this high growth. So I don't actually know what they do. I haven't looked at what their subscription is or if it's valuable or if it has a moat. But NVIDIA, here's one thing I will point out as well. NVIDIA used to own the stock. We used to check the NVIDIA portfolio. We've been streaming for well over a year now. And we used to check the NVIDIA portfolio. And on this day right here, I remember it exactly. NVIDIA used to own this stock. NVIDIA owned a lot of this company. Then NVIDIA sold their entire stake. And that's why they gapped down that one day. I can show you the current NVIDIA portfolio. But yeah, NVIDIA sold out of that company for some reason. But it's actually higher today than where they sold it at, I think. But yeah, here's NVIDIA's portfolio. They own Nebius, ARM, CoreWeave, APLD. Pretty cool. Okay, thanks. I'm subbing. Hey, thanks so much, John. I really do appreciate that. Yeah, if y'all wanted to subscribe button, I try to stream every single day, sometimes twice a day, and I don't sell anything. I have no course book. Watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. So, yo, Alex, we just looked at Marvel. If you scroll back like 2 minutes on the YouTube stream, you'll see my analysis on Marvel. We are like a little longer. We just looked at them. I think, you said Marvel, and then I responded to it earlier, Alex, and then we analyzed it. So let's see. Is a recession near? I don't know. I mean, hey, there's no real catalyst to stop the circular AI Ponzi right now. Like NVIDIA, honestly, I'm a believer NVIDIA is going to $200 plus before maybe year end. Which would be cool. Thoughts on WeRide? WeRide is complete Chinese junk. Wouldn't touch them. I'm not even gonna pull them up. Just don't buy them. They're not good. Okay, let's see. What up, Improvement? What about Reddit stock? Hey, yeah, what up, Stark? Yeah, Reddit is one of my better performers. I'm up like double on them or more. Yeah, NVIDIA does own a stake in WeRide. You're right. RDDT. Warren Buffett just backed out of BYD after 17 years. You're kidding me, really? I remember the Berkshire Hathaway bought BYD over Tesla. Okay. Well, here's Reddit. This is a lot of people think Reddit is just a meme stock, but this quarter specifically, when they reported earnings, had absolute gangbuster incredible earnings. Like, I kid you not, huge beat on the analyst expectations. Again, orange lines what the analysts expect. They had a huge beat on revenue, an insane beat on net income. Analysts were expecting 18 cents. They reported 45. And the net income expectation in the future is going to be huge. Like, they're going to be making like a couple $100 million in net income a quarter in like a year or two, because their ARPU is growing. That's the one thing that made the stock go up so much. Their ARPU, their average revenue per user, is up 48% year over year. So the sales are up 70. Like, that's so growthy for boring Reddit. Who knew Reddit could be this growthy? I didn't. That's what the stock market didn't. That's why they've gone up so much and been so growthy. It's financials. The revenue's up 77 after going 53, after going 23. They literally have no debt at all. This is a completely debt-free company, no debt on the books, over $2 billion of cash earning. They have $2 billion of cash, and that makes them over $20 million of interest a quarter. That's what's so cool about this high interest rate environment. A lot of people are paying high interest rates, but if you're a cash-rich company like Reddit, you're milking interest. So that's what's pretty cool about them as well. The free cash flow numbers are insane as well. They're making, the free cash flow is up 4x, over 100 mil of free cash flow. So the future is bright. Future's bright on Reddit, and I am so biased because I own them, but I have 4 shares of them. But I really like them because they're financially sound. Most people are in a recession. Yeah, honestly, we're seeing certain sectors are totally in a recession, like the restaurants, for example, almost. Like, look at Wendy's. Like, Wendy's is literally the same price that it was back in 2007. That's a typical, like Jack in the Box too. Has anyone heard of Jack in the Box? They're not too popular. They're the same price as they were back in 2005. They also own, if anyone knew this, Del Taco. McDonald's, I love them though. McDonald's is the best. Hey, what up, Dex? If you got a stock I'm going to look at, let me know. Good to see you. Hi, yesterday night was bad day. Lose quite a lot of money due to Eli Lilly, Visa, all red. Hey, don't worry about that, though. Those are all great companies that it's okay to lose money on, because unless you plan to, here's the thing, for especially for high-quality stocks, the only reason, and I say this, it's easier said than done. The only reason you should get upset about a great quality stock declining that you believe in the long run is if you plan to never buy them again. You never plan to add more to the position. If you really can get a great quality company that will have those crazy returns in the long run at a better price, then that's great news. But again, it doesn't always feel good to see your portfolio lose that money. Like, look at this. Every stock in here was red on the day. Same with my my Robinhood portfolio, except for Google that went up after hours for some news. But every stock in here was red on the day too. It's a rough day. Let's see here. Ooh, what do you? What up, Nathan? All right, he said figure. FIGR, right? I think they just IPO'd. So unfortunately, when we look at their financials, we won't. Normally, I look at the financials of a company, but since they just IPO'd, we don't get too much history. But actually, we can see that the revenue from 2024 Q2 went from 80 mil to 100 mil. So that's a nice 31% increase. And their net income positive. Okay, that's really interesting. They made 15 mil. Now it's 30 mil. So it's a net income positive company. We'll see what happens after they raise some more funds from their IPO to their balance sheet. But Figure Technology Intermediate. What does this company do? They're on my watch. Blockchain native. Okay, so they're a crypto stablecoin industry. So do beware. They're crypto, maybe like a Circle or something. I don't know. Ubiquity. Yo, I love Ubiquity. So UI right here, that's like a at-home everything, like DIY server. Let's check out UI right here. I think I remember Apple announced they were going to start selling similar products. Oh, it was this day right here. Apple announced they were selling some copies of Ubiquity stuff, or announced like down in the road, but then they reported earnings a few days later and it just didn't matter. So look at this stock price. That's incredible. Y'all want to see something sad? Look at this. Man, sold this out. It was or was it 2 shares? So I had 2 shares, so it's not like it. But anyway, I sold it 100. I would have been up 700% on them if I didn't sell. Well, that's a kick in the nuts. But anyway, this is a great. This is why they deserve this. Look at this right here. Look at this net income beat. The analysts were expecting 260. They reported 440. They beat on every metric. They beat on revenue. They beat on net income. They beat on EBITDA. They absolutely deserve to gap up after that gap down. The future sentiment just got completely changed. Yeah, look at that. SL on the bottom. Luckily, I have a lot of other great stocks, so you can't beat yourself up with that. But yeah, this is incredible. UI deserves this nice, that nice gap up. Sprouts Farmers Market is crashing in AI tech bubble. Yeah. Thoughts on Plug? Huge. Okay, yeah. Hey, Plug, honestly, this isn't one you want to touch. And I always just show you the numbers for yourself. So just keep this in mind. If you ever want to buy this stock, just know this. This is the whole company is worth $2.7 billion. This is their market cap. Again, you could buy the whole company for $2.7 billion. So let's say you own this business. You own the entire company. You paid $2.7 billion for it. You're buying a business that loses you. This is how I like to look at things. You just think you own the whole company. You're buying a business that lost you $230 million in net income this quarter, $200 million the previous quarter, $1.35 billion in net income the quarter before that. Like, they are losing more than their entire market cap just in net income a year. And it's not like this is just this year, like just for all of time. This is just a money burning company, and that is just compressed their balance sheet. Or is the business even growing? At least the sales are up, but it's just, you can't trust that one, I think. They've had a little momentum in the past couple of days, but yeah. I bought Plug in the pre-market. Oh no, Jello. You know what? I'm maybe overly bearish on them because of how much money I lost on ChargePoint. Yeah. But the financials don't lie. I just don't like those numbers. Those net income losses make it a tough, like, meaningful buy and hold. Like, to trust it to buy and hold forever, I don't know about that. To swing trade it off the bottom in this high momentum market, now I could see that. I don't know about just buying and holding forever, that one, and trusting that. So hopefully that was helpful. Hey, what up? Swan said, honest. Hey, so to be honest with you, this isn't a great stock. And I'll tell you why. Here's my thought process. And I've looked at them before, seen that YouTuber Jeremy guy pump this one up. But here's my little analysis. So look at the market cap in the top right here. This is a $420 million company. So the whole entire business is worth $400 million. And here's the thing, they're not growing anymore. The revenue is only up 0.4%. Like, that doesn't really beat inflation. So the revenue is up by 0.4. And the good news is, so here's the good news. They're actually making net income now. They made $3 million. So we want to see them continue this net income positivity. But I just don't like that they're not really growthy. They just sell a commodity to, it's a low margin industry. You know, most of their business, 60% of their sales are diapers and wipes. And the revenue is only up by 0.4. So that does kind of scare me a bit. Uh-oh. Thank you, TikTok, making me fill out a live CAPTCHA. All right, okay, we're back now. Sorry, TikTok made me fill out a CAPTCHA because it thought I was AFK. I don't get it. But anyway, I'd be careful just because of the slow revenue growth. They actually have no net debt, which is cool. So it's actually, it's one of the better $400 million market caps out there. But I wouldn't like have it as a huge position. So someone said MSTY. Hey, what up, Casper? So MSTY, don't touch this one unless you're trying to just maximize your dividend income and are okay with just NAV erosion, net asset value erosion, return of capital, high expense ratio fee. So first off, this ETF right here, admittedly, not just from me, but from other people, like, this will not outperform the S&P 500's 8% CAGR. So you're buying something that won't return 8% a year, you're already losing by 1% a year because you have a 1% expense ratio fee. Like, imagine if the S&P 500 had a 1% expense ratio fee, that compounds your losses like insanely fast. You wouldn't even understand. And so first off, this is at an all-time low right now. You buy it to maximize your dividend income. It says they have a 200% yield. They actually don't. Their payouts are going down in the future by a lot because of the return of equity and return of capital. I mean, you just don't buy these unless you're really trying to maximize income and just are okay with slow NAV erosion of your capital. And you pay high, you basically get your money back in short-term capital gains, and you pay tax on it. Like, I don't want to get into covered call ETFs right now, but that's one of the worst ones. There are good covered call ETFs, or better ones, like TLTW is a better one. Like this, I wouldn't want to sell calls on Bitcoin. Like, your calls for sure gonna, like, they sell calls. I've sold calls before. It's selling calls on Bitcoin. Like, you're for sure gonna get called on it. Like, so that's why I like TLTW. I actually used to own this one. That was back there. This sells calls on TLT. Again, even though I like this one, look, it's also at an all-time low right now. They always trend to zero, kind of. So you gotta be careful. If you're looking for a high yield asset, though, you want a high yielding asset. I get it. Some people like high dividend yields. Here's some of the higher yielding assets that I found sustainable, in my opinion. First off, Iron Mountain has a 3.3% dividend yield. But honestly, look at this one. This one's up on the day because they're a BDC. Everything else is red. Like every other stock in here was red. But high yielding Main Street Capital, some of the dividend plays do kind of better when tech stocks do down. But this one has a 6% dividend and they pay you monthly. So you get a 6% dividend yield. It's paid monthly and you get some somewhat decent stock price appreciation. And sometimes they make so much money they pay you twice in 1 month. Pretty cool. MAIN, Main Street Capital, BDC. They actually also pay short-term capital gains on your dividends. So I recommend owning them in a Roth IRA or also pay 12% tax. Why, Moomoo? Hey, Nathan, what up, man? Yeah, this is just I've looked at it. I've used every other brokerage. Like this one is just my favorite one, most useful, lowest fee brokerage. Yeah, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the very first link there. If you're just looking to get into stocks the first time, I recommend this one. I love Robinhood too. You could get this one too. It works just as well. Well, not just as well. Same thing, but this one you actually have real tools on. Like you can really analyze a company on here. You get a lot of cool insights, like all the super investors portfolio, like Nancy Pelosi, and you can see their exact holdings, weightings, and if you wanted to, you can like batch trade, follow into them, or Buffett too. There's a lot of cool portfolios in here. You can see the Nvidia portfolio. So anyway, let's keep going here. Can you do CEG and SMR? Let's look at SMR. First off, I love CEG. I'd much, a million rather times buy CEG than New Scale. But I've already covered CEG so much today, people probably get bored of it. But yeah, CEG is a better play. But yeah, this one basically just finally got their contract revenue. Like, look, a year ago, revenue was 400,000, 900,000. But look at the past 3 quarters, they finally have some revenue. But again, I still think this one's ridiculously overvalued. To be honest with you, like $11 billion company, little bit of sales. But basically, this company is making these SMRs, these small modular reactors, basically mini nuclear reactors. Like if you picture a normal nuclear reactor site in your head, it's like a huge site, those huge silos and everything. Again, I like that one. That one's actually, I don't love that one. It's a pure nuclear momentum play. That's your momentum play. The actual quality, fundamental, buy and hold and never sell nuclear play is CEG, Constellation Energy. Now, this is the best nuclear stock out there in my opinion. There's not even a close second. They literally own the most nuclear reactors out of any other publicly traded stock by far. VST would be a close second place. Honestly, I'd rather buy CEG or VST. So yeah, CEG, for sure a winner. Love them. And SMR will probably be a winner too, just from momentum. So let's see here. Plug is probably under the radar stock. Oh, hey, I'd careful. I owned ChargePoint. Lucid was my biggest loser. Yeah, ChargePoint was my biggest loser. I still have. Some of my biggest losers are too cheap to sell, like Zoom, for example. Like it's literally 60% of their market cash is their cash on hand, and they make a couple $100 million a quarter. It's like too cheap to sell, but they have no moat. I mean, in the UiPath as well, like some there's certainly a lot of times if bad fundamentals, it's certainly okay to sell out of a loser. Certainly okay. Selling at a charge point when I did saved me another $1,000 because it fell another 50% after I sold it at a 50% loss. Like it's crazy. Wait, yo, what do you mean, John? He says they pay your tax. I don't know what you mean by that. I wish someone would do that, but no, I pay my tax. But I was probably talking about the short-term capital gains and long-term capital gains. I'll be super quick about this. Basically, again, not financial advice. This is U.S. basically only from my research, and I just did my taxes, so it's true. If you make under $50K a year, which is me, I make way under that. But if you make under $50K a year, your long-term capital gains tax is 0%. Okay, so that's what taxes favor the low income, and it just favors investing. So whenever I receive a dividend from McDonald's, for example, whenever you receive whenever you receive a dividend from McDonald's, it's taxed at long-term capital gains. So I received this $26 dividend from McDonald's in my taxable account, and it's completely tax-free. That dividend I got, every single stock in here pays a dividend, and every stock is, whenever I receive the dividend, is tax-free. And also another thing, this is going to sound crazy to you, but this is completely true. If I sell my Meta right now, all my shares of Meta, because I've held it for over a year, Whenever I take this $1,000 profit, it's completely tax-free, even in my taxable account, because I make $50,000 and it's taxed at long-term capital gains. If I didn't hold it for a year, it'd be taxed at short-term capital gains and it'd be taxed at 12%. Anyway, hopefully that was helpful. Okay, not financial advice, but let's keep going here. Stark said, NET, yo, I love Cloudflare. They literally keep your data secure in lava lamps. If you haven't looked into it, it's pretty cool. So check this out. Cloudflare, they're a cybersecurity stock. They deserve to be at an all-time high. If we go to their net income right here, actually, let me just go to the revenue first, because this is what I think you'll find cool. This is why Cloudflare is a winner. It's a pure growth play. I mean, look at the sales. Just hits a record every year, every quarter, insanely good revenue growth. But if we look at the net income, it's still negative. That's because they actually just acquired a company. And here's how you can tell that. Well, actually, you can kind of see it on the balance sheet. The assets went from 3 to 5.5 billion. Why? Well, you go to the cash from investing activity. We can see they just plowed 800 million, basically $1 billion into a new acquisition. Or just in new assets, but that was an acquisition. So anyway, Cloudflare is really cool. Certainly wouldn't pay its price here, but I would love to own them. Cloudflare, if you didn't know, this is what's so cool. Literally 12% of all global internet traffic goes through Cloudflare in one way or another. Like, it's insane how they touch every part of the internet in some way. Anyway, let's keep going here. Hey, Looney, good to see you, man. Hope you're having a great day. Let's look at Costco. Yeah, Costco actually, they just reported earnings today, so I can't look at them quite yet. Or let me just click the news tab here. Costco membership base becoming younger. That's what's so cool about Costco. This is why they're such a great business model. You know, whether you go to Costco or not, you're paying a subscription fee every month. So they're collecting that high margin subscription model fee. And consumers don't mind it, because whenever you go to the store, you're buying stuff in bulk, you're getting a good deal. And they get customers in the door with their loss leaders. Y'all know that, what's it, like $2.50, or is it $1.50 hot dog? The $5 rotisserie chicken, or it's something like that. But they have these loss leaders, gets customers in. They're making a lot of money at basically it's a well-run company. The only thing is, I think why they're falling is just because they trade at too high of a multiple. 53 times net income. It's really high, but they deserve a high premium. They really do. I really love, that's honestly like the best grocery store. If I had to pick one, I'd rather pick Costco over Walmart, but not at this valuation. Like, I'd rather buy Sprouts. Honestly, I'd rather own Costco than Sprouts Farmers Market. And if I just, but I'm still happily on Sprouts Farmers Market. But the valuation is just too nuts on Costco. Okay, I bought a lithium stock. Yo, the lithium stock went up almost 200%. That's crazy, Suzuki, man. That's what's up, dude. Wait until Cloudflare at 207. Nice. Can you ULTY? Hey, that's just basically yield max again. You don't trust these. Like, it's at an all-time low. Look, when it loads here, I'm going to guess it's at an all-time low. Sorry, my Wi-Fi is terrible, and I don't mean to be a mega bear here. That's probably why my phone's messing me. I mean, let's look at that stock price. I mean, it started, what year was this? This year, or March 2024, it started out as $19 and now it's $5 at an all-time low. So these just, every time it pays a dividend, just NAV erosion, you buy it to maximize your dividend income. Again, the dividend goes down by double digits every year. The yield is significantly lower. This is 123%. It sells covered calls, and I can't trust those. Doesn't outperform in the long run. I try and warn people about those, just not because it's like, it's just, I think it's a bit bubbly, these covered call ETFs. It was some of them are better, like the SVOL. This one sells covered calls on legit market volatility, like on the VIX. If anyone's heard of VIX before, the SVOL sells calls on that, but even that can't really save it from, actually, this one's done not too terrible. This one was created in 2021. It was 26. Now it's 17, but what's the yield here? 19% dividend yield. And yeah, notice this. It was in 2022, it was 4, it was 370, 350, 250. The dividends trend down every year on these covered call ETFs as you pay the insane high expense ratio fees that already put you well behind the S&P 500 by 1/8 a year. It's tough, but there are better ones. I asked about TTWO last time. You said it was not a buy. You think I should sell or wait for GTA 6? Yeah, I really or my thought process was, yo, the reason this is the stock that owns Rockstar Games, which is GTA 5, GTA 6, it's priced in at this point. It's priced in most of the huge growth because it's really expensive right here based off their current metrics, like ridiculously expensive. The only reason that's explained is from the future growth of GTA 6. If it's better than expected, it's the risk reward isn't great here. 225 is where you really want to probably consider it, but not as a huge position. But 225 maybe, but risk reward doesn't look good there. But yo, I'm glad you did good on them. By the way, sorry, I'm like streaming 30. I've been streaming now for 2 hours and 30 minutes. That's much longer than I thought I would. So my head's starting to hurt a little. But let's keep going. Let's look at a couple more. I appreciate everyone being here. Aldi stock, yo, Aldi does not have a ticker symbol, but what's another? Oh, is it Casey's? CASY. Casey's General Stores. You ready for this right here? This is like some Nvidia type move. Look at Casey's General Stores. Okay. What's the best yield stock? You know, that's so, there's so many answers to that. Like, do you mean a low, like dividend growth stock? Like Google pays a dividend. I love Google. I own Google. And McDonald's too. McDonald's has a 2.5% dividend. A basic great dividend stock for any dividend portfolio is McDonald's, in my opinion. McDonald's is almost like safer than Google for the next 100 years, I think. So McDonald's, and actually that's a long time horizon. But I love Main Street Capital as well. That's, if you're looking for a real high yielding play, that's probably what you're asking for. It pays a short-term capital gains dividend, but this is a BDC. It's one of the companies that literally have to, by law, pay out 90% of their taxable income in the form of a dividend to avoid taxes. And since their payout ratio is so much lower than 90, they're paying special dividends every month. I kid you not. They're making so much money right now that they have to literally pay out their extra income to special dividends. So they're a monthly paying dividend stock with a 6% yield. They're cool. I don't expect that to outperform the market in the long run. Yo, what up, Eric? What you doing, man? Oh, he's buying more. Hey, what up, Eric? Good to see you, man. Hey, what up, Adrian? What's up, dude? He said qubits. Hey, this is one of the quantum momentum names. So yeah, if you like quantum and are looking for a swing trade, check out qubits right here. You know, this time right here with the market at all-time highs, with all the momentum and the AI bubbles, like this is the time to swing trade quantum. But at this price especially, you got to be up crazy, Adrian. At this price especially, at 25 plus, risk to reward does not look good. And I almost bet money. I'll bet, I shouldn't say that right now. I would bet that they're going to dilute you even more. They're going to issue shares at this price. Like they literally diluted you by 530 million last quarter, which was what they should have done. But honestly, they have no right. Here's the thing. Again, I've looked at many companies worth $9 billion. This is a $9 billion company. You don't see many $9 billion companies out there just doing a couple mil of revenue a quarter, 3 mil, 15 mil. And analysts are expecting it to just stay at 3-4 mil. So that's all momentum swing trade. Not a fundamental play for sure. It's a momentum play. Cool. Oklo's another one. Oklo, don't touch that one. That one's a revenue list. Extraordinarily overvalued. I'd rather buy qubits than Oklo. And they're both at. Yeah. Do you believe Visa and Eli Lilly will be green this night? I don't know about this night, but I know these are great buy and never sells. I wouldn't worry about the tomorrow. I wouldn't worry about the next week. If you have the intention to buy and never sell it, you almost just don't even need to pay attention to what it ever does. So check out Visa right here. This is why you trust it. And even as it goes down, you trust that it's not going to go, insanely lower because they're doing insanely well. The small micro credit card transaction fees that we pay that are slowly bankrupting you are making Visa a lot of money. It's making Visa over a $5 billion of net income every quarter. And what is Visa doing with $5 billion in net income a quarter? Well, they deploy it all into share buybacks, just buying back their own share. Check that out at the top. They're doing $4 to $5 billion of buybacks a quarter. That's insane. And here's what that does for you as a shareholder. If you're like, what does that really do for you? Well, check this out. It gives you more ownership in the company here so you can tell. If you look at the net income is up by 8.2, but the net income per share is up by 12 because the share part of the ratio went down. That means there's more net income per share because there's less total shares that exist. So more piece of the pie goes to you. And it forces the stock price to go up pretty much. It forces EPS to go up, makes the dividend cost go down. Share buybacks just are so great. So how about QUBT? Hey, yo, Jello, that's probably going to be another similar kind of, let's see. So a $3 billion company, is that what Sezzle's market cap is? No, that one's probably much higher. That's Powell Industries. This is the same market cap as Powell Industries, and they're doing 50 mil in net income a quarter, and this company does 61K. Like, they've been able to dilute you nicely. Look at that. Dang, they diluted you by 200 million this quarter in the whole, but that's okay. But this is the thing. $4 billion company, 61,000 of sales a quarter. It's hard to just trust these numbers. Again, momentum, they're just like Oklo or Qubits. You just momentum swing trade it. Dude's been streaming nonstop. Hey, what up, George? Yeah, we've been streaming for 2 hours and 40 minutes now. My head's hurting a little. We'll look at a couple more. Yeah, hey, I appreciate y'all being here. By the way, if you want to hit the follow button, we stream every single day. I don't sell anything. I have no course book. Is there a way to see these stats on Robinhood? There's not, Cam Dog. That's why I like this app so much. I do have Robinhood though. That's the thing. That's why I like kind of recommend Moomoo more than Robinhood, because if you go to Robinhood right here, like this is all you get, like just little square of red. Like you can't even see the history. There's no dividend history. Like this app right here is a million times more useful, and it's lower fee. You have to pay $5 a month with Robinhood to get a yield, but this company, you don't have to pay anything a month. It's free. There's 0% commissions, like there's 0% fees. This is the best brokerage in my opinion. Anyway, yeah, if you want to get this brokerage I'm on, and it's where you buy stocks on if you want to buy stocks. It's in the link tree in my bio, the very first link. Yeah. Let's see. Can you check on ASML? Yeah, dude, ASML, that's the lithography company, basically the chip making manufacturer. Their three main customers is literally, I believe, Intel, Samsung, and NVIDIA. Those are like their three customers. And yeah, so they make the holistic lithography solutions. This is the thing. They're the most justified buy they've ever been, in my opinion. Check this out right here. If we look at the revenue, it was very nice. It's at a record. It grew 35% year over year. So revenue's up 35, but net income is up by 90. They were able to expand their margins. Net margin was at 35%. It's never been above that before. It's never even been really over 30%. So they had an insane net margin this quarter. You also get a small little growing dividend, which is cool. They like change their dividend every quarter, but you get a 0.8% yield. So honestly, they're like an NVIDIA ecosystem play. Did you know the U.S. government had to come in? The Chinese were literally having inside employees at ASML try to steal and replicate the ASML lithography machines. Like I've looked at it. The technology is so advanced that like I can't even like comprehend it. But yeah, the U.S. military helped ASML out from the Chinese stealing their stuff. And the Chinese they stole one of their $400 million machines, and it literally like takes a group of engineers to like decode and service it. Like they basically stole, they couldn't even do anything with it. I don't know why I'm talking about this, but let's keep going here. Meta is, hey, what up? Mark 2 said Meta. Ooh, hey, George, appreciate that. Actually, let me look at this one. I saw this one first. ABAT. Oh, so this is America Battery Technology. It's I think this one actually has some decent forecast estimates. Let's go check. Again, be careful. $500 million market cap. Very small market cap. But let me check out the projections again. Oh, actually, so this isn't the company I was thinking about then. So there are no projections from analysts. At least, okay. So you're really paying attention for the next couple quarters. The next couple quarters is going to be super, super, super volatile for them. And it's really make it or break it the next couple quarters as they really transition from basically a trash company that should be a zero from doing 200,000 of revenue to hopefully a couple million every quarter. Like it's 3 mil this quarter, up 8x. What's it going to be the next couple quarters? So it's going to be very important those next couple quarters. They have a good balance sheet too. Looks like no net debt. Not too shabby. But again, careful on that market cap. Wouldn't trust it with a large amount of money. So, silver, baby. Hey, you know what? Did you know Google and all the companies above that, Google's market cap is worth more than all the silver in the entire world? Can you believe that? Google's market cap, and obviously NVIDIA, is worth more than the whole entire silver market cap. All the silver in the entire world, Google's worth more than that. But hey, gold is the most valuable asset in the world, worth more than NVIDIA. Okay. Wendy's. Okay, Wendy's stock. I feel bad if you own this one. And oh, the guy who said that was In-N-Out. Yo, I wonder if In-N-Out could ever go public. But here's the sad part about Wendy's. Hey, what up? We'll look at P6 too. Wendy's is the exact same stock price as they were back in 2007. And I didn't even see that. Yo, hey, Jello. I didn't even see that. Thanks for the 10 cats, for the 10 roses. I really appreciate that, Jello. So yeah. Wendy's, it's honestly not just Wendy's. If we look at Wendy's stock, they've been in some trouble. Not just Wendy's, of course. Let's look at Krispy Kreme stock too. These restaurants are really seeing margin collapse. Look at Donut, for example, which is Krispy Kreme. They're at an all-time low. They just burned through a lot of money after their failed McDonald's partnership. We look at Starbucks as well. Starbucks is the same price that it was 6 years ago. So Starbucks has been flat for 6 years. Why? Well, it's sadly because the margins have collapsed. The net income, they used to make easily $1 billion plus in net income a quarter. Well, now it's $500 million. It fell 47% year over year. And that's not propped up on some like one-time adjustment like that's real. These losses, the margin collapse, and it's unfortunate. Only 5-6% margins now. So, and honestly, I could kind of see that coming. It's kind of popular. Like a lot of people are like, "Hey, don't go buy that $7 coffee every morning." Hey, I'm a huge fan of that. Don't buy a $7 coffee every morning. Go buy stock with it, and go make 20-cent coffee at home or something. I don't know. Although, hey, I did get I got a Ford. It's only on the McDonald's app. You can redeem it once a day, and I do it every morning. I'm probably losing McDonald's money. You can get a $4 breakfast meal at McDonald's. You can get a chicken biscuit, hash brown, and a small coffee for $4.22 with tax. Okay, let's look at PSIX. This is one of the companies I do own. It's actually been one of my better performers. I bought them at an all-time high, and I didn't love buying. Sometimes I bought this stock at all-time highs, and I thought it was going to continue to win, and it just continues to win. And this is the kind of stock you don't want to have a huge chunk of your portfolio in. Like if we look at some of these other positions like Supermicro, Clear Secure, I purposely keep these as small positions because you don't want to trust a lot of money in them. But for the case of PSIX, I think it's worth having maybe a really small position in them, but certainly not at this price because it's really ran up recently. But when I did buy the stock, people were calling me crazy because I literally bought it the day it hit an all-time high. But check this out right here. Here's why I love this stock. You won't believe this. The revenue is up 73%. So the revenue is up 73, and look at this net income. They're super profitable. 50 million net income this quarter. The margins are expanding. Let's see the net margin expansion actually. Look at that. So the margin went from 19 to 26% net margin while growing sales. Like everything here is headed in the right direction, deleveraging the balance sheet too. So PSIX financially is why I bought them. And I sometimes buy stocks at all-time highs. I bought Powell Industries the day it hit an all-time high. And so, some of these other stocks too, as long as they have good financials and are reasonable multiples, I don't mind. Hey, what up, Franz? What up, dude? No way. For the 15 roses. Yo, if you got a stock you want me to look at, let me know, Franz. I really do appreciate that. I think Starbucks is closing how many stores, they say? I don't know. One reason Starbucks has been hurt so abnormally large is because of their failed expansion. Well, I shouldn't say that. I should say insane competition from China. From specifically, here's a cool coffee stock for you. Sorry. Let me take a sip of my water real quick. I've basically been talking for an hour and a half, and that's like my first sip of water. That's crazy. Okay, Luckin Coffee is literally Starbucks' number one issue right now because they are taking market share. Check this out right here. They have their own stores, and then they have their partnered franchise stores, which both are growing. And look at the same store sales growth, mostly from opening new stores, but 13% year over year. Store level operating profit margin is 21%. They have insane, much higher than the Starbucks margins. But check this out right here. You can just kind of see that if we go to, that was the store margin. Here's their net margin. They have around a 10% net margin. I like how growthy they are. Wow. Whoa. Revenue's up 49 after growing 35. And they're making a couple $100 million net income a quarter. Oh man, sorry. Okay. Luckin Coffee's interesting. They're Chinese, though. All the revenue comes from China. Do beware. UNH or Eli Lilly? You know what, Looney? If I had to pick UNH or Eli Lilly, I'm going to pick an Eli Lilly. Just because I think it's a safer company that'll have better returns. I love Eli Lilly's industry a million times more than United Healthcare's industry. This, honestly, 100% the answer is Eli Lilly right here. Check this out right here. If you don't know, what is Eli Lilly? What do they do? You've maybe heard of them before, but what do they do? Well, basically, they're top selling. They sell a bunch of individual prescriptions. Like they're large. You won't believe this. They just created Zepbound. This is if you heard of Ozempic. Zepbound is an Ozempic competitor. They literally just created this out of nowhere in 2023 on the hype. It was 175 million revenue. Now it's 2.3 billion. It's up 4x year over year. So they create these prescriptions out of nowhere and they get so much sales. Like look at Mounjaro, their largest one, for example. This is an insane story. In 2022, it was 16 million revenue. And ever since then, it just hits a record every year, every quarter. So it's up 112 after going 217, after going 7,000%. Like the growth is insane. And they have a bunch of other ones too. Like, I don't know, well, this one, what is other cardio, something like that. Anyway, they're also extremely growthy and extremely profitable. As you saw, the revenue is up 37, but the profits are up 61. They're making pretty much they're going to be making like 5 billion plus in net income a quarter. So they're going to be making 20 billion a year. So let me actually do that math. So 676 divide by 20. So 33. So this company trades at 33 times forward net income. It's not too insane for its growth. That's honestly, if Eli Lilly falls 5-10%, like it's starting to look on a forward metric like pretty attractive. Like it's the growth that I love at Eli Lilly. I look for growthy companies. I think they're going to be more growthy than UNH. Who's playing Royal? He said Roblox stock. Okay, so they are publicly traded. What happened? Oh, hey, yeah, thanks, Jello. Yeah, hey, again, if you want to get this app, I'm on. It's in the link tree in my bio, the very first link there. And you can kind of see the super investor portfolio. And this Roblox stock we're talking about is actually in the Cathie Wood portfolio. If you've heard of the ARKK ETFs, they kind of been a joke. They kind of underperform the market. But check this out right here. Roblox has done insanely well. They're at an all-time high. And to be honest with you, I don't mean to be the mega bear here, but I don't know why. I don't think it's this justified. I think it's all momentum. Actually, I know why, but I don't think it should be this high, and the risk reward does not look good. Here's the reason. One, great news. This is a cool metric we get. This is their daily active users on Roblox. It's like that video game. Their daily active users this quarter was 111 million. When the same time last year, it was 79 million. So this is the most valuable people. You know, the daily active users went from 80 mil to 111 million. To pull that off is really impressive. But the bad news is this company has an insane amount of stock-based comp, where if you just look at like the free cash flow of the company, you're thinking, hey, this is great. They're making couple hundred million of free cash flow a quarter. But what's not included in free cash flow is stock-based comp, and they're literally paying their employees like 500 million worth of stock a quarter, and that is included in GAAP net income. So that's why they're literally losing 200, 300 million in net income a quarter. And the reason they have to pay employees with stock is because they don't have the cash, and they can't issue debt either because they're already pretty leveraged out. So they're in like a tough place, but people are happy. Sentiment's going up because let's pray these aren't propped up on AI bot numbers, but the daily active users are growing like crazy, and that is growing the revenue. Revenue's up 20 after going 30, but again, these net income losses kind of scare me away from this one. The fact that they lose 200-300 mil and this balance sheet's kind of leveraged, I think it kind of makes it like not great. Okay. What do you think of? Yeah, hey, try to be nice here, man. Come on. Yeah, hey. All right. Let's see here. Anyone know when PSIX went public, started selling shares? Yeah, I'm sure a quick ChatGPT search could answer that, but I don't know. But I do own PSIX. Open big buy-in. Yo, I heard. Yeah, so I'll actually cover this stock. This one is a trading vehicle, basically. Hey, user 23, if you want to get this app I'm on, it's a brokerage. It's where you buy stocks on. So if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I like to keep my cash in here as well. Keep my stocks in here, and because your cash earns daily interest, which is pretty cool. So anyway, lowest fee brokerage. So let's look at Open Door right here. This is a huge momentum company. If you're wondering, what does Open Door do? What is this? This is a real estate company. They just flip houses. That's all they do. They just flip houses. And what happened last time we went to a super low interest rate environment like 2020? Look at what happened. They printed money. They grew super fast. They were doing 4 to 5 billion in revenue a quarter. But as interest rates got hiked up very fast. They're normally high in just a year. Look what that did to their revenue. They're super interest rate sensitive. It collapsed 70% year over year. But as we know, Jerome Powell literally last month, or not even a month ago, less than that, just cut interest rates by 25 basis points. And that's why I think there's so much momentum around this name. They still burn through net income every quarter, but they're trending closer to profitability. They just cut a bunch of headcount to get super close to profitable. They just got a new CEO and CFO. That's a real estate house flipping play. I think it's a momentum stock right now. If you're like buy and hold kind of investor, I would look for a different interest rate sensitive stock, maybe like a mortgage company like a Rocket, or a home builder like a Lennar, D.R. Horton, or a pool, which Buffett just bought. So I'd go with the other interest rate sensitive. Yo, what up? APLD. So wait, what do you think of APAD? Wait. Ant, are you talking about APAD or APLD? Let me know. Philip 66. That was actually funny story. I was trying to buy the first stock I ever bought. I didn't know what I was doing. I just typed in to Google, what's a dividend stock? And it said Philip 66. So I typed into Webull, Philip 66, and I was trying to buy this company, but I accidentally bought Philip 66 midstream. And that company I bought was a K1 MLP, and they sent me a K1 tax form, and it cost me $200 with an accountant. So that was fun. But look at this. But this is basically, forget that story. This is just an oil and gas play, kind of like a Chevron and Exxon, and you really use this as a diversification play. This one does not give a K1, which is good. But whenever there's war fears, interest rate, inflation fears, oil usually does good in those environments. And plus you get the high yield. But one thing I will say, these don't outperform in the long run. Like it's kind of like barely up since 2019 when the S&P is like significantly higher. So these don't outperform, but you're mainly buying them for the diversification into oil, which does good in certain environments like war fears, inflation, and you get the yield. Okay. AP. Okay, I type in, ADAP. You know what? It's okay. Well, actually, I hope this isn't the stock you're talking about because I'm not really going to cover it. So here's why. I don't really cover these kind of stocks. If you look in the top right, the whole entire company's worth $33 million. Yeah, we'll look at Home Depot. The whole company's worth $33 million. It's a penny stock. They're worth 12 cents a share. They're at all-time lows, and let's see the net income here. They lost $30 million in net income this quarter. So think about this kind of logically here. Look what that did to their balance sheet. They now have like double the liabilities as assets when they used to have a lot more assets and liabilities. But they lost $30 million in net income, $40 million last quarter. The whole company's worth $33 million. No wonder this stock is at an all-time low because if you peeked at the financials, they have real bankruptcy risk, I think. So I'm really glad I could actually point that out for you, Ant, because a lot of people, like, if you don't even ever check financials, like some people just be like, hey, here's a chart. The thing looks really low. Let me buy the dip on it because I think it could maybe go up. I was you when I first started. I bought ChargePoint. I never looked at a financial. I didn't care about net income or anything. But if only the average person knew like that buying this, like, the whole company's worth $33 million. They lost $30 million this quarter, $40 million. Like it's going to continue. That's the kind of stock that's going to continue to climb lower. So the stocks I recommend you look for are ones with good financials that are on a dip. Like one I just bought the dip on that Sprouts Farmers Market right here. They're on a bit of a dip, so I bought some shares. Don't try and catch a falling knife, though. You should dollar cost average. So let's look at Home Depot right here. What up, Franz? Hey, thanks again, Franz. Dude, he just gifted another 25 roses. Dude, Franz, thank you so much, my friend. I got you. So here's Home Depot. This is another interest rate sensitive play. As we go into a lower interest rate environment, this should be a huge earnings tailwind as people start to spend more on their house. They go to Home Depot. Whenever they spend on house upgrades, they see it as an investment, so they don't mind going to Home Depot. This is a really cool company, kind of like Lowe's. So first off, you get a 2.3% yield. That's awesome. Look at this. The dividend goes up every year. Like in 2021, you got paid $6. If you relied on this for income, you got paid $6 a year. Now you get paid $9. Like that's a huge pay raise. Like that's what's so cool about dividend stocks. If you work at a job, you maybe get a couple little bit of raise, but this is a significant 40% jump, and they continue to raise their dividend. Look at the multiple. They trade at 27 times net income. One reason the stock is rallying up so much is because it's forward looking with the lower interest rate environment. If we look at right now's numbers, they're not going to look great. The revenue's up. Actually, that's better than I thought, actually. The revenue's up 5% year over year. Net income's flat. They're printing money. Look at that. $3 to $5 billion in net income a quarter. But I really think the lower interest rate environment is going to be a nice earnings tailwind for Home Depot, and they're a perfect just buy and never sell stock. You get the dividend every quarter, they raise it every year. So let's see. I bought some Nvidia and SoFi. Dooku Pass said SoFi. Let's do SoFi. Yo, I love this company. Then we'll get to maybe Coca-Cola, Lululemon Holdings. Yeah, Lululemon's interesting. They have a huge downtrend. So yeah, let's look at SoFi right here. I do think this one isn't a great buy right here. Like the risk reward to buy this one isn't great yet. But if you have the intention to buy and never sell this one, then it might be. But check out the growth here. This is the one thing I love about SoFi. I do own them, by the way. I'm totally biased because I own them, but I own them for a reason. It's because they're a great financially growthy company. I like them for the growth. That's the reason I like SoFi. If we go to their financial services, because they're a fintech, they have their own banking charter. They got it through a loophole. It's not like a patch because of them. It's up 105% after going 80, after going 222. It literally hits a record every year, every quarter. This is nuts. 105% year-over-year growth. Their main lending business is also pretty growthy. That's up 30% year-over-year to a new record. So both businesses are booming. They're beating on analyst expectations. That's great. The orange lines what the analysts expect. They beat on revenue, net income, EBITDA. We go to this right here, people are just starting to take SoFi serious. The revenue is up 42, 850 million of revenue. Out of this 850 million of revenue, 100 million of it was after tax net income. I love SoFi. And I'll show you my position in them. I regret every share I've ever sold of SoFi. But yeah, that blue line's my cost basis. I bought all my shares, I bought all my shares right before this earnings day. This was January 2023. So I'm Mr. Diamond Hands over here. I've been diamond headed SoFi, but another one I so regret a lot of shares I sold. Same with don't get me started on a Robinhood and like Palantir. Sometimes your biggest mistake can be selling out of great companies. Kind of like when I sold out of most of my position in Robinhood look at this, I sold 50 shares at $36 a share, and it made sense at the time. If I said, hey, I came up to you and I said, hey, I just took profit. I just sold 80% of this stock that I'm up 300% on. Does that sound like a good idea? Most people are like, yeah. And it made sense to me, but this is the kind of company that just continues to win. So don't always sell your great quality stocks and then buy. The saying goes, don't trim your flowers and plant weeds or something like that. I don't know. Anyway, phone battery's low. Oh, dude, thanks, gamer. Yeah, appreciate that. You think SoFi will drop anytime soon? I hope so, but I wouldn't touch it at this price. I see. Thank you, man. We'll take a look. Oh, hey, no problem there, Ant. Yeah. Look at Nebius. Yo, Nebius just had that huge partnership with Microsoft, and they're in the NVIDIA portfolio. So we go to the NVIDIA portfolio right here. Their second largest holding, their fourth largest holding is Nebius. This company's at an all-time high. And again, just because NVIDIA owns something doesn't mean you should. Always go do your own research. Like NVIDIA owns like WeRide and RXRX. Hopefully you don't own these, but these are absolute junk. Don't touch these. But Nebius, on the other hand, this one I can get my hands around. Like, check this out. I judge them off their financials, and the financials look really great here, especially after the new Microsoft deal. But the revenue went from 14 mil to 100 million, a 6x, or actually a 7x increase year over year. And honestly, if we go to the analyst expectations, which are probably going to get revised higher, it's expected to continue to climb. Like, it was already a record 100 mil this quarter. It's expected to be 260 mil next quarter. That's insane. And I wonder if it'll pull up the weekly news here. Nebius signs major $17.5 billion data center deal with Microsoft and rose $4 billion in funding. Like, the sentiment is great, and I'm not shocked to see them at all-time highs. I think they're overbought now, but they're really cool. What app is this? Yeah, hey, by the way, I'm on a brokerage, Linktree in bio, very first link here. This is where you buy stocks on. So if you want to, it's a brokerage, Linktree in bio, very first link, if you want to get it. I keep a lot of people I know just keep their cash in here. Like, they get it just to analyze stocks, but they also like just keep their cash to earn interest. It's free. There's no like monthly fee. That's what I like about it. Like with Robinhood, I had these other brokerages. Robinhood's great too, but it's just not as useful as that one. But yeah, like with Robinhood, you have to pay $5 a month and you get a 3.758% Y. Well, if your idle cash in here, it still gets the 3.85% APY, actually a slightly higher APY, and you don't have to pay $5 a month, which is cool. And right now it's kind of favorable to hold a lot of cash, which is pretty cool. Yeah, you can kind of see deposit and get a 3.85% yield. So basically, if you have $1,000 or $1,098 of cash, it'll earn you 12 cents every day of interest. And it says 32 cents. It adds up the weekend days. So yeah, you get paid 11 cents a day for every $1,000, basically. All right, let's continue here. Sorry. By the way, full disclosure, I'm not. It's an affiliate link. If you go to the link tree in my bio, the first link there, it's an affiliate link. So if you deposit $100, we'll both get a fractional share of like Nvidia. So, but you don't even have to deposit any money. Some people just don't even. They just analyze stocks with it. Like someone said, AMD. Let's do AMD. Yo, I do own this one. They've been disappointing. Like if we see the rally on MU, Broadcom, Nvidia, Taiwan Semi, AMD's really underperformed, and sadly. I own AMD and I'm still doing pretty good on it. I'm up 29%. So honestly, I can't complain. 29% I'm pretty happy with. And here's why I own AMD versus NVIDIA. I think NVIDIA is facing the law of large numbers. NVIDIA is a $4 trillion company. For you to double your money, they have to go to $8 trillion. But AMD is a $260 billion company with similar growth. Check this out right here. Also, obviously, we know they have a huge market share. Their PC GPU market share is at 17%, which is pretty cool. They're in client and gaming. And recently, a lot of their growth has come from their data center business, which is NVIDIA's main growth driver. Because as you know, data centers need GPUs. You know, that's what most of the Mag 7 is CapExing on GPUs. And for AMD to get into that business themselves is genius because they can supply to their data centers their own GPUs, which is pretty cool. The revenue, look at this, it's up 32%. Not as growthy as NVIDIA's, I will say, but still good. You know, definitely better than the single-digit growth back when AMD was advanced money destroyer with no growth, but the growth's finally back, which is good. So revenue's up 31. Net income was $900 million this quarter. Oh, look at the FCF, which has a free cash flow. Free cash flow's up 4x year over year. Wow. Yeah, $400 million to $1.7 billion, a 4x increase in free cash flow. They have no net debt either. That's a really strong looking balance sheet. I don't know about you. So anyway, might be biased. I do own AMD. So that's my chip play. I think it's my only chip play out there. Yeah. Oh, new stock I bought. PODD. Of course, I buy it yesterday and then it falls 3%. Okay, this one is kind of an experiment. New stock. Really cool. I'm going to do a whole YouTube video about this stock soon. I think it'll impress you. By the way, the number one way to support me, if you want to support me, because I sell nothing, I have no course book, just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there. So if you ever missed anything, you can replay it on the YouTube stream. So yeah. So let's see here. You are seeing, you are low. Hey, what up, Matt? Hope you're having a great day. I appreciate that. So how do you think about portfolio allocation from Australia? Hey, that's what's up. Yo, Momentum. I would find an index or the Australian version of just the S&P 500. Buy the S&P 500 as most of your portfolio. It's tricky because you probably have to pay some sort of ADR to buy. Like if you wanted, I recommend you buy Apple, okay? Or not financial advisor, of course, like Apple, Google, let's say. I think you have to pay an ADR because it's American and you're in Australia. But I think there's an ETF that you can buy. So look into some sort of ETF, S&P 500 ETF, and just have that as the backbone. So what stock did you just mention? Oh, that was PODD. They're the number one market share. I just bought 2 shares of them. And look at this. So pretty much all-time highs. I'm going to do a video about them soon. PODD. So let's see here. And by the way, if you missed anything, yeah, you can replay it on my YouTube stream. So TPL, this is actually a cool like real royalty play. So they own like 400,000 acres of land, and then they give out royalty rights to these companies for mineral, water, and oil rights on their land, and then they collect a high margin fee off that. So that's why if we go to their net margin, it's a bit, a lot higher than your average Joe Schmo oil stock. It's 60% net margins. That's pretty good. That's because it's not like a Chevron or EOG kind of. So yeah, check this out. We go to their net income. It's really consistent. It's not going to grow or really fall a bunch because it's like a stream they get. But yeah, pretty cool. You're making over 100 mil, usually a net income a quarter. You get a 0.5% yield, safe payout ratio. So yeah, that's TPO. I think they just got added into the S&P like 600, or maybe it was S&P 400 or something. Intel went up today. So yeah, Intel, honestly, I think they went up because of the war tensions. I have no clue on top of the momentum of the NVIDIA investment. But basically, there was I didn't really look into it. There was some sort of war, fear. Basically, any geopolitical issues, if those continue, is going to actually benefit Intel, believe it or not, which is very interesting because we're trying, if you didn't know, NVIDIA right now, if you didn't know, they just designed the chips. Taiwan Semiconductor in Taiwan manufactures all the chips for NVIDIA. So all our manufacturing for the largest company in the US is all in Taiwan. And we're trying to move some of that. What's going to happen is, dude, NVIDIA, this is legit. They're playing it so smart. And NVIDIA is going to move their crappy GPUs to Intel, like their old GPUs that they produce, like the GTX 1080s or 2080s. They're going to produce those at Intel and then just keep the majority in Taiwan. But anyway, we're trying to be more independent in manufacturing in the US versus Taiwan Semi. So that's why the government took a 10% stake in them. That's why they basically forced NVIDIA to take a 5% stake from my little analysis. So Wendell said, Sherwin-Williams, yo, we just bought a bunch of paint. Actually, someone will be proud of me. My friend, we painted a driveway, and basically I made $130 profits in 4 hours work for, we had like this paint, I forget the exact word, shark baited the paint where it painted the driveway. Anyway, here's Sherwin-Williams. We used their paint. Let's see how they're doing. They have a 0.9% dividend yield. And look, they raise their dividend every year, so that's pretty cool. I know they're struggling right now because of the whole residential market. So like the home builders, they're not doing great right now. But the reason I think the stock is kind of doing well is because they're forward looking. They're not doing great the past couple of weeks here, but as we go into a lower interest rate environment, that should like benefit lows, and people should spend more on paint and on their house. But yeah, this is the one bad part. The revenue is only up 0.69%. Like that doesn't really beat inflation. Revenue's up 0.6, and the net income actually fell by 15. Was that? Yeah, it actually did. So that means their margins fell a little bit, but still they're making a lot of money. 500 million to a billion, or 500 mil to 800 mil of net income a quarter. That's fantastic. And a nice 1% yield. I think they do buybacks too, but honestly, I think they could go a little lower. I kind of want to see the growth come back, and it probably will as we go into a lower rate environment. So, we'll look at a few more. Dang, this is my longest stream ever in history, and I've been streaming for over a year. I've never done a longer stream than this. Probably look at my head starting to hurt. Let's look at a couple more though. No problem there. How is Tesla? Yo, you're not going to love my thoughts on Tesla. This is a huge like future play. I'm shocked they're doing so well because Tesla, well, they have like the cult following, but basically this is such a forward future looking play. If I judge Tesla the way I would any other company, this is like an absolute like anomaly of a company. Tesla really is a mind of its own. It's unlike any other stock. So basically, it's so forward-looking with the robotics and robotaxi future business. But check out the market cap in the top right. They're a $1.4 trillion company. The sentiment's pretty high. Elon Musk will be worth $1 trillion if he can get the market cap to $7 trillion, and it's 1.4 today. So still a bit to go, but I think investors were happy on that sentiment. But check out. I'll just show you the financials. This is the part I'm not too happy with. We look at their total vehicles delivered year over year. Their deliveries were down by 14%. We can kind of just see this in their total automotive segment. If we go to their total automotive segment, it's down by 12% year over year. So that business is down by 12, and the energy business is down by 7. That's the part I'm struggling with. They have this insane multiple. They trade at 250 times net income. You know, it's okay to have a high 250x PE if you're high growth, but the growth isn't here now. And the EPS, even the 2-year out EPS multiples, like that's probably a better way to word this. You are paying for growth, like an insane amount of uncertain growth that's supposed to come not in 1 year, not in 2 years, but in like 4 to 5 years. Or maybe 3 years, I don't know. But yeah, look at the revenue right here. The revenue's down 11 and the profits are down by 58. Their margins have collapsed. If we go to their net income, look at this. It says it's only down 16%. They actually had a little funny money gap net income trick. They actually made much less than 1.19 billion in net income. It was actually around 750 million in net income. So they do that all the time, by the way, in the past, where they prop up their EPS numbers on gap tricks of like either selling Bitcoin or certain depreciation stuff. So that's why you always look at the operating profit for a company and blend it with the net income. So anyway, you're paying a lot of future growth for that stock. That's what I'm trying to say here. That's supposed to come in a couple years. Okay, so this is, actually, I can't talk about what industry this is in. So this is kind of we'll say it's a Las Vegas stock. That's kind of what we'll call this. Not an industry I'm too happy about. You know, this stock is actually the same price that it was back in 2017. And I hear that Las Vegas isn't doing too well. It's tourism right now. And so, yeah. I can't look too much longer. How's that doing? It's up 7% year over year. Food and beverage revenue is down. Let me just go to total net income right here. So look at this net income. Now, here's the thing. Like, this just looks kind of choppy to me. Like it's just kind of hard to trust this. What's the total revenue? So revenue's up by 2.7. You know, that kind of barely beats inflation. Revenue's up 2.7, but this choppy net income just looks hard to trust. Plus this industry, you know, if you look really quick, I can't say what that is, but that's what they do. Yeah, I don't love that industry. There's a lot of regulation around the tax rate and stuff. That it's uncertain tax future. Okay. Okay, Philly cheesesteak. What up, dude? He said GRRR, Gorilla Tech. Okay, this one's like a half. There was some contract they got. Okay, here it is. Actually, I found it. Gorilla Technology shares rise on 1.4 data center contract. It's some like, yeah, Southeast Asia data center. So a bit away from America, but good news nonetheless. That's a big order that they got. So basically, this is just forward looking because right now, revenue isn't much. The net income's choppy. So it's that new deal that they just got or something. I don't know. I don't really know much about that company. I apologize. That probably wasn't too helpful. So yeah, but I would be careful with them. G-Lu said PTLO. Okay, what is, oh, that's the Portello's. Hey, so yeah, this is another one of the restaurants that are just getting smoked recently, and I feel bad. You look at Wendy's, Krispy Kreme, Jack in the Box, they're all at all-time lows, which is unfortunate because they're seeing a lot of input cost inflation. I mean, luckily, it's not the end of the world of them. Like, check this out. They're still making, you know, actually, let me go to operating profit. So yeah, they're making around 10 million in net income a quarter. So if you kind of average out 10 mil of net income a quarter, that's not huge. Like, I just don't know how they're going to be able to like grow too much. Like the revenue's up 3.6. We want to see the growth. That's the main thing. We just want to see the growth come back because when the growth is gone, you turn into Wendy's. And that's what the stock looks like. I mean, look at Wendy's right there. Or not just Wendy's, Krispy Kreme. Unfortunately, actually, part of this was from their huge McDonald's loss, but it's kind of the whole industry. It's not just them that's doing bad. It's kind of the whole industry wide. So in my opinion, if you're looking for a great restaurant to buy and never sell, check out McDonald's stock, MCD. It's my favorite one. How'd you learn to analyze? I kind of just over time, I'm not an expert for sure. Again, none of this is financial advice. I don't sell anything, no course book. I'm just trying to give my opinion, but I've read books. I've been investing since I turned 18, or actually I've been investing since I turned 16. But I've just been a while. Anyway, I'm actually probably about to end the stream here, guys. I really appreciate y'all being here. I've been streaming for 3 hours and 15 minutes. I've never ever streamed this long before. All right, we'll look at probably one or two more. Super Micro. You know what, Super Micro? Here's why I stay away from them, sadly. And I do own them. Here, I'll show you my position in them. I'm a happy shareholder, by the way. I'm up like 70% on them. Yeah, here we are. I'm up 75% on my Super Micro shares. I bought them during their accounting fraud. I bought them this day right here. But Super Micro, they did just get that new like crazy big data vault deal worth like, I think it was like 10 billion or something. But here's the bad news. Here's why I'm scared to buy Super Micro, and I think they're going lower. I low-key think Super Micro is going back to $40, and I wouldn't buy them now is what I'm trying to say. I'm scared of the margins. So if we look at the revenue, this is good news. The revenue is up 7.5. So that's good. But the actual net income, the profits are down by 34%. So what does that kind of mean in English? They're losing their margins. They just sell a commodity. Again, they get direct shout outs from NVIDIA for installing their Blackwell's really good, but the margins are falling here. So that's what I'm being careful with on Supermicro. I wouldn't have them as a major position, but they do kind of benefit from the whole NVIDIA ecosystem, AI boom. So what's your thoughts on ACN earnings? Well, actually, let me look at this. So they reported earnings today. So they beat on revenue, they missed on net income, but met on EBITDA. So there was some sort of, yeah. So they had a big miss on net income. I don't know what happened there. I got to do more research on that. How do you remember when you bought them off the dome? Because I'm good like that. And I don't even remember what I was talking about. What was I talking about? What did I buy? I don't remember. Oh, Supermicro. Oh, yeah, Supermicro. Oh, when did I buy them? I know the exact day. Remember the area that I showed? Yeah, watch this. It'll show the buy order. This is how I know, because it shows the buy order. Look at that. Boom. Oh, I sold it that day, or I sold one share there. But anyway, yeah, I just remember I bought them during the whole accounting fraud debacle. Look at this. You wouldn't believe it. The market freaked this day. I kid you not. I was watching it. Imagine this. your Apple, you're waiting for them to report earnings, and then they just don't report earnings. Super, like we were waiting, like, oh, is it 10 minutes late or earnings 30 minutes late? They just didn't report earnings. So there was a huge, massive fraud investigation, accounting fraud, and they tanked. And I decided to buy a little bit of them. And then they fixed it all. And then they finally reported earnings like months later. So there was a huge gap of where they just never reported earnings for like a year or like basically 8 months. It was crazy. Very interesting. Oracle just took control of TikTok. Is that true? I don't know about that. Let's actually check out the news. Oracle, let's see. Oracle, Silver Lake, and MGX will be main investors in U.S. TikTok, sources say. Oh yeah, we've been hearing about that. $18 billion note offering. Maybe that's to get some cash to buy TikTok. I don't know. Well, wait, lead U.S. TikTok investment custodian. Okay, cool. Yeah, I heard like the data is going to be stored. What time do you hop on live? Hey, what up, friends? Hey, I try to stream every single day. Usually when the market, I've been streaming for 3 hours now, so kind of 4 hours before now. So I usually try to stream when the market's open and a little sometimes after when the market's open too. So yeah. All right. We'll look at a few more. Let's see. Oracle, yeah. I heard VOO is a buy. Absolutely, Dave, man. VOO is just the S&P 500, just literally a basket of stocks, and it's a basket of stocks that are amazing, and I'd happily own all these individually. NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom. I own a lot of them individually, like Amazon, Google, Meta. So yeah, I'm always a fan of that one. A lot of retail investors just can't keep up with the S&P 500. So instead of trying to keep up with it, just keep a little bit of your portfolio in the S&P 500. And then do your own fund strategy. I promise you'll feel better and you won't feel like you missed out. There's so many people out there that feels like they missed out. If you just keep, you won't feel this way. Just keep 5 to 10% of your portfolio in the S&P 500 even. And when the market does rally like it has been doing, and maybe your other stocks, you won't feel left out. Kind of. Anyway, and even if you buy them at a price you're not too happy with, it's only 5% of your portfolio. And I don't think any person out there would be like, dude, you put 5% of your portfolio in the S&P 500? That's so risky. Like no, it compounds 8% a year. Okay. C stock. Oh, this is Citigroup. I think this is a bank or something. Yeah, look at that. Ooh, well, it looks like 2008 got them hard. Okay. Well, since then, though, the stock has been doing pretty well. It's above 2019. Let's go check out the yield here because these usually have nice yields. Yeah, 2.2% dividend yield. That's the same as JP Morgan. Okay, so they're in markets, United States personal banking, services, wealth. Let's see how the wealth management's doing. That's up 20% year over year. That's usually really high margin. Let's go to net income. Yeah, this is in USD. They're doing 3 to 4 billion in net income a quarter. And the dividend payout ratio is only 36%. They actually have a lot of room to raise their dividend. I can see why they're at all-time highs. It's pretty cool. Someone said LAC. Yeah, the government actually, we saw recently the government is making deals because we're trying to be more independent from other countries, especially because we're poking them on a stick with tariffs. So like they just did a huge deal with MP. The government took a stake in MP Materials to supply, literally this one mine they're opening at MP Materials is going to supply the U.S. with certain rare earth minerals for the next 50 years. And if we go to Lithium America right here, the government just took a 5 to 10% stake in Lithium America. So that's actually why this stock rallied up so much. Like with MP Material, they're not going to get any revenue for like 2 years or I think 2026, 2027. But yeah. Ryfit said what happens is, yeah, hey, by the way, I'm on a brokerage right here. It's my favorite one. It's where you buy stocks on. So if you want to buy stocks or looking into it, check out this brokerage right here. It's my favorite one. It's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So, yeah. Lowest fee, it's zero commissions, no monthly payment. It's better than Robinhood in my opinion. Because on Robinhood, you got to pay $5 a month to get the APY, but there's no monthly payments, no fees at all. Like you buy a stock, zero commissions. Sell a stock, zero fees. Pretty cool. Unless it's in like a Chinese ADR or something, but then that's not the brokerage taking the fee. How can I see your portfolio? Well, hey, here's my portfolio right here. You can kind of just ask me, and I do stock portfolio. I don't know how you can though when I'm not. So I don't have that. Hey, but I actually, okay, we'll look at one more. ISRG. Let's look. ISRG. This is a great medical device company. They make like those huge, I forget the name of them. huge machine, huge medical device machines. I'm just brain dead for streaming for 3 hours and 30 minutes. But let's see, ISRG, this is one of my, as you know, I love judging companies off their financials. I love this one financially. So they sell instruments and accessories in the medical device industry. And look at the growth here. Literally hits a new record every year, every quarter. So they sell hospitals the machines and then they service them. So if we go to the services revenue, it's 16% of the revenue. It's all reoccurring and it's all really growthy. Revenue's up 24 after going 10, after going 15. There is no red numbers. Everything's increasing. So it's pretty cool. And it's not just the revenue that's growing because the revenue's up 21%. So they're doing $2 billion in revenue a quarter. But look at the after-tax net income. They're making $500 to $700 million in net income a quarter. And of course, these growth rates are beautiful. And not only that, the cherry on top as well is just the fact that they have an absolute fortress of a balance sheet. They literally have $5.3 billion of cash and no debt at all. That gives them tremendous freedom. It's a huge safety net, literally no debt on the books, that so much freedom. They can do whatever they want. And because they have so much cash, that $5 billion of cash isn't just sitting there. It's not in a checking account. It's in I listen to what they do. They put them in 1 to 3 week treasuries, which is basically a money market fund that expires after 3 weeks. Basically, they buy the treasury bills themselves, but they literally make on the interest 80 to 90 million of interest on their cash a quarter. Man, you wouldn't believe how much Google and Meta make on their net interest right now. That's what's so cool about some of these cash-rich companies in the high interest rate environment and ones with no debt, like a random company like Powell Industries that has 300 million no cash, or 300 million cash, no debt. A lot of companies are paying negative interest rates, but if you have a lot of cash, you just keep it and earn 1 to 3% interest on it. So anyway, guys, I hope you guys have a great rest of your day. I'm going to hop off the stream. My head is hurting. This is the longest stream I've ever done by far. So, by the way, if you want to hit the follow button, we stream daily. This was a 3-hour, 30-minute stream. And if you missed anything and want to replay it, the very beginning of the stream is really fun. I introduce you to the new stock I bought that I haven't talked about since the beginning of the stream. If you want to learn what that new stock that I bought was, check out it on the replay of my YouTube channel. It's called Nathan Robert. You just type into YouTube Nathan Robert. It's also in the link tree in my bio. That's the number one way to support me. I sell nothing. I have no course, book. Only thing I do have is a YouTube channel. This is my only TikTok account. I'll never follow you, DM you, nothing like that. And if you want to get this app as well that I'm on, this is a brokerage where you buy stocks. And if you want to buy stocks, this is my personal favorite brokerage, most useful one, lowest fee. And a lot of people like to just earn their interest on here. I keep my cash in here. It's a brokerage. It's in the link tree in my bio, very first link there. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both actually get a fractional share of NVIDIA for $20, but you don't even have to deposit. You can just benefit all these cool things. You can see the super investors portfolio and stuff and all that. Anyway, have a great rest of your day. I'm going to go. I'll be streaming tomorrow as well. See you later. Hey, again, check out my YouTube channel. Best way to support me. All right, we ended the TikTok stream. Thanks for everyone on the YouTube. Yo, Kyle, everyone on the YouTube stream, y'all are the real ones because I'm trying to build up my YouTube channel. Thanks so much. B69, YouTube Agent, Yang, Looney, Stark, and now, yo, you're still here, Stark? No way, dude. Thanks for watching this long. I hope you have a great rest of your day. And hey, before you leave, if you would hit the like button if you haven't already, it does help out. Even though the stream's basically over, I think it'll